almost heaven. West Virginia, Blue Ridge Mountains, Shenandoah River. Life is old there, older than the trees, younger than the mountains, growing like a breeze. Country roads, take me home to the place I belong. West Virginia, Mountain Mama, take me home. Country roads, all my memories gather round her. Miner's lady, stranger to blue water. Dark and dusty, painted on the sky. Misty taste of moonshine, teardrop in my eye. Country roads, take me home to the place I belong. West Virginia, Mountain Mama, take me home. Country roads, I hear her voice in the morning hour. She calls me. The radio reminds me of my home far away. And driving down the road, I get a feeling that I should have been home yesterday. Yesterday, country roads, take me home to the place I belong. West Virginia, Mountain Mama, take me home. Country roads, country roads, take me home to the place I belong. West Virginia, Mountain Mama, take me home. Country roads, take me home. Country roads, take me home. Country roads. It's by far the hardest thing I've ever done, to be so in love with you, so alone. Follow me where I go, what I do, who I know. Make it part of you to be a part of me. Follow me up and down, all the way and all around. Take my hand and say you'll follow me. It's long been on my mind, you know it's been a long, long time. I've tried to find a way that I can make you understand the way I feel about you, just how much I need you to be there where I can talk to you when there's no one else around. Follow me where I go, what I do, who I know. Make it part of you to be a part of me. Follow me up and down, all the way and all around. Take my hand and say you'll follow me. You see, I'd like to share my life with you, show you things I've seen, places that I'm going to, places where I've been. To have you there beside me, never be alone. And all the time that you're with me, we will be at home. Follow me where I go, what I do, I know. Make it part of you to be a part of me. Follow me up and down all the way. Take my hand and I will follow through. It's a long way from LA to Denver. It's a long time to hang in the sky. It's a long way home to Starwood and Aspen, my sweet Rocky Mountain paradise. Oh, my sweet Rocky Mountain paradise. The springtime is rolling round slowly.
Good morning. Good morning, everyone. And for those that might be passing by on YouTube, I'm Bagadon. This is StockMarketCaddy.com. And let's give you an orientation of where we are, what we're doing. First thing is today is Wednesday, short week, September 4th at about 11:38. So we thought we'd punch up and give you a view of what's happening with the markets. Totally normal, right? We have a big down day, little bit of a bounce. We don't think it's anything more than just that, just an anemic bounce. We're still running a program now. We did not run it overnight. I did take a little bit of a flyer on a manual trade, just in case we dumped off and it was bracketed, and we had a run up of about $700 or $800, and then we stopped out with a $172 loss. So that wasn't the program, that was me. Starting Sunday at 6 p.m. with a balance of 25,000, we're at 34,068. We got a profit factor of over 5. So I did intervene yesterday, as you saw, to capture some profit and to turn it off. As is normal, we did it too soon. We probably would have added another 3,000 or 4,000 if we just left it alone. To that extent, I want you to think about this and what this means. When we say, sometimes we say things, and I'm not sure that folks may have heard these things before and just discount them. We're not trying to get the very high. We're not trying to get the very low every single time. That can't be done. That'd be like playing, getting a birdie on every golf hole. Not likely. Okay, not even probable. We're playing for the middle. So that means that our account is not going to be high watermark at every minute of every day. It's not going to happen, right? So you got to learn to understand that. And but it is armed. It is armed. And if the 5-minute goes short, and if the 30-minute is short, which I think the 30-minute is still short, let's just change this here. Take a quick peek at it. Go to the 30-minute. The 30-minute it's still short. 61 30-minute segments ago, or at 5 a.m. yesterday. So person, if we had still been in that trade, that's where it would be running. Now it ran up like to 14 or 15,000. So if the 5-minute goes short here in the next few minutes, you might see it, and the 30-minute is still short, then the machine is going to take that trade. it's running on a chart that you can't see. We can only show you so many screens. It's running on another screen. How we set that up is the sort of thing that we try to cover in Q School. It does have some optimization to it, namely on the exits, and it's doing better. And we ran it last week in this configuration. This week, little minor changes, minor, and it's running better than the backtest model. So we just keep running it. Beautiful thing. We're mindful that this week is a short week. And so we're having, even if we stop trading now and didn't make another trade, this is a very, very fine week, right? Trading one market, one mini that you're able to see netting $9,000 is a very fine week. So our mindset is let's not, over push it here, but it is Wednesday. So we'll keep trading a little bit, but we're not going to give it all back. That's not going to happen. Am I going to finish on the high watermark? I don't know. Probably not, right? If I stop, the machine probably will go on to make much more. It's always the case. So I just described that to you. It's just the way it is. It's the life of a trader. We look at a swing machine, and what do we see? At 9:40 this morning, the VIX went short, which meant that there was probably going to be a little bounce in the market. And the 5-minute at 8:45 was already bouncing. The 5-minute, it was a long. It's still a long. It's just dipping. And the 5-minute NQ was at 850. So you'd be up, if you had taken this trade, you'd be up about 600. If you had taken the 850 trade on the NQ, you'd be up about 1500. The YM 625, you'd be up 800. The Russell, you'd be up 460. Right. So, and then we look at gold. Gold is trying to get long here. Oil is short at 1130. And the Bitcoin is, on a daily basis has been short for 24 days. 24 days. Folks waiting for Bitcoin to triple, quadruple. They're going to be waiting a while. If you have any questions or you want us to plug in any market, let us know. I'm happy to do that. And otherwise, we're going to just shut up and let you watch. Be sure to visit the website. I should probably put a little note down, stockmarketcaddy.com. We've been here a long time. We just didn't come out of the ground 6 months ago, 6 years ago, a long time. We were doing this before there was Twitter. Stock Market Caddy came out of the ground around 2011, 2012, right around the point where Twitter was coming up. And I was like, you know what? I wonder if there are folks out here that would want to try to do what we're doing. We don't make specific recommendations to buy or sell anything. I don't make any claims that you will be successful. I don't know. I truly don't know. If you decide to join as a monthly member, you're going to get a view of the algos each night. You get a little bit of a commentary. I'm sometimes asked, Don, can you just tell me what the market's going to do the next day? Well, if I knew exactly what the market was going to do for just one day, or just the next 5, oops, Abby, don't bug. Her mom had just left for the gym. If we knew with certainty on any one bar or any one time, we could, load up. So it isn't that, right? This is a game of probabilities. It takes time. It takes discipline. It's a brutal game to the extent that, unlike any other endeavor, if you get it wrong, or you break the rules, or you get impatient, they will take money from you. They will extract it. They will take it out of your pocket. Not many other endeavors, do that. You don't make the sale, you don't make the sale. but your boss doesn't reach in your pocket and take out, $1,000. They will do that here. And that learning to overcome that and understanding that is very, very important. And so when you come in as a monthly member, we don't know what skill set you have, if any skill set. We just don't know. We can't keep, we can't give you the Q school, every monthly member. So if you're coming in with some skill set, you're going to have chock full opportunity each and every night, probably more opportunity than you have money for if you have a skill set. If you don't have a skill set and you want to work on that skill set, we have the Q school. Then you can take the Q school without having to be an annual member. I mean, you can just, say, I want to spend 3 weeks with this guy and I just want to tap his brains. And, I'm not going to be an annual member, and that's okay. We're going to spend as much time as we do with everyone else. And we're going to go through everything: stocks, options, futures, and in the criteria, and not just for intraday, swing, and investing. We're happy to do that. And you'll get a very, very good education. If at the end of the Q school, you say, hey, I want to be an annual member, then we're going to credit you back 30%. You say, you know what, I want to wait and think about it and trade in, in a simulated environment, or just take my time, and in 4 or 5 months you come back, you're more than welcome back. There won't be we won't discount, because we're not trying to penalize you. But after the Q school, if you keep moving forward, it's easier for you and it's easier for us. If you come back to try to be an annual member after the Q school, and the Q school is a one-time deal, if you come back, you're going to have to work harder, and we will too. And that's okay. I mean, it's totally okay. You got to see, and we have these conversations with everybody, how the markets are always here every day, every week, knock on wood, thank goodness, although, the political winds right now, I sometimes wonder, but I think they'll always be here. They've been here in the history of the country. And the good news is, whether they're Republican or Democrat or independents or libertarians or Marxists, whatever, they all like to get involved in the markets. They do. And whether we have COVID or whatever, they do, they bend over backwards. They may close churches and places of worship and everything else, but they don't like to close the markets. So that is a good thing. It's not a good thing that they closed everything else. It isn't. But it is a good thing that they, and I just opened soda water, not a beer. I don't drink alcohol. I used to, many years ago when I was a kid and in college and stuff. I just don't have time for that, and I need every brain cell I got. And that's what I love about the trading game, and I love about Stock Monkey Caddy. I do love what we're doing. And I'm here a lot, here every day, doing our thing. But I can't make any claims. So we don't make specific recommendations to buy or sell. And I can't make any claims that this is what you will do. But I can instruct you and instruct on the different programs and approach. I hope you'll heed the instruction and take it to heart and go slow. And as we like to say, learn to trade your game, find your game. And we have some folks that have done exceptionally well. I don't talk about them a whole lot because I don't want to blue sky anybody. I know how hard they worked. I know how long some took, some didn't, but it isn't, this robot assisted trading. It isn't automatic. It isn't, I'm going to plug in swing machine into the wall. I'm going to sit back and, lay in a hammock, and this thing's just going to print me money and put it in my account. That would not be a realistic view. I can't say that enough. It is a tool. It is a tool to help you get the job done. I go to Lowe's, I'm having to trash our flower beds. I'm like, do you guys get a tool here that can just do that? You know, well, we got this, we got that. No, but I mean, I can just automatically do it. I got to get in there and dig that crap out. What a hot, nasty job that is every fall. So, um, and I don't particularly enjoy digging out the flower beds. I do enjoy this. It's air conditioned. I have music. I have audiobooks. I have a treadmill. I have my pups. I have multiple screens. I have my independence. I can move about. I can go for walks. I can go for a swim in the pool. I don't usually, I have, but not usually, just leave it and go play golf. If I do, I ask Susan to keep an eye on things. So I'm lucky that way. And Susan is very, very good. She knows everything that I know about TradeStation and about, what has to happen. And so that's TradeStation, boy, I cannot say enough good things about them. I have no relationship with them. I haven't even asked. I don't. I'm just a real happy customer. Really, really happy. And I'm a very demanding customer too. From my background of going into surgery with surgeons, they were very demanding on me, and they should have been, right? You just couldn't bring them crap into surgery. One, they wouldn't have you. And and plus, if they didn't have any confidence in your company, if they didn't have any confidence in the products, but also if they didn't have any confidence in you, you were never going into surgery with them, right? These surgeons that I had worked with that I miss, but many of them, I had their personal phone numbers. Um, and so we were not just providing them a tool, but we were teaching them how to work with these tools so that they could improve their outcomes, their surgical outcomes. I borrowed that phrase because they can improve their patient outcomes, their surgical outcomes by learning how to use different tools and or facilitating and learning how other great surgeons are getting things done. We tried to act as a catalyst to share. We're going to later today, if our annual members are listening, and I know they've been asking, I'm going to set the time this afternoon, and I'm going to make a video, and we're going to plug it into the website. It'll be available. We're going to make it available. Annual members have a complete access to our members website, and it'll go there. And monthly members, it's more restricted, but we will copy them as well on the program that we were running over here for the last week. Please understand, though, please understand, you can't jump the shark. You do need to have that acquired trading skill, right? You need to have it. And the reason why you need to have it is if this program goes next week, right? We're going to have a good week this week. There's no way I'm going to let the market take too much of that profit away from me. It might take a little of it. I may not finish at 34, but I'm not going to let it, go below 25. That's for damn sure. Probably not going to let it go below much, maybe 31 or 32. So I have a mental stop here at this point on the account. And it's kind of like, when you're maybe playing golf competitively, and in my fantasy mind of playing professional golf, which I'm not, I always wondered, how close to the scoreboard would I watch? I don't think I'd be watching the scoreboard on the first day. Would you? I don't think I would. I'm playing the course. I just need to, post a good round. At the beginning of the week, I'm not too concerned with my account, this scoreboard here. I'm not too concerned with it. But as the week goes on, and now we get up a good, healthy amount, then I am casually aware of the scoreboard and of the time. And so I look and I say, well, today is Wednesday. I don't like to trade on Fridays, so I only got today and I got Thursday tomorrow. I just got to make sure that I don't give too much of this back. So I begin to aim small, miss small. And we have a professional golfer in our midst, and that is his saying, aim small, miss small. So in the beginning of the round, I might be a little bit more, and I think I'd probably play golf the same way. I don't know, maybe what you might do. See if that makes sense. You've really got to think about what you're doing and what you're trying to accomplish. We're trying to, during the Q school, we're going to try to move you mentally away from, just coming in. This is not really a part-time endeavor. This isn't, I got a job and I'm home now and it's 8 p.m. and I just ate a late dinner and I'm going to come in and I'm going to start buying and selling futures contracts and see if I can make myself some money. That isn't a good idea. And then the next day, maybe you're not in at all. And then maybe it's Thursday night and, I really worked late, had a really late dinner. I put the kids down or something. Now it's 9:15 and I'm going to trade for 45 minutes or an hour before I go to bed and see if I can make some money. Not a good idea. That's not what we're doing. And I don't suggest anybody do something like that. Or maybe you have a job during the day that maybe you have a home office, but maybe you have a boss that's a royal pain in the ass. I had a couple of those. I had one in particular. He came late in my career. I actually had great bosses from the moment I was in my 20s all the way through. The last one he was just awful as a boss. He was a great person, but he was just terrible to work for. And I never really felt like the other bosses that I was working for them. I was actually working with them. And so that's why I say it was a pleasure. I absolutely enjoyed talking with them, working with them. It was a blast. We had a great time. This other guy, all he wanted to do was have conference calls. And he would have conference calls on conference calls. And it would drive me nuts because I was trying to also maximize my time and I wanted to be trading. And I didn't trade real well during that period. And it was costing me money because it'd always be like, well, I've got to try to squeeze this in between conference calls. So that isn't learn from my mistakes. And we try to share with many of our mistakes. We make plenty of mistakes. We're probably still going to make them. I hope not as many. We're very humbled and very by the markets and very attentive to them. So make sure that we don't, we're going to have losing trades, but we don't want to get stung. So it's up to you how you want to approach this. If you want to subscribe to someone that is going to just give you, 10 option trades a night and you're just going to willy-nilly pick them and do that, that's fine, but that really isn't us. We want you to start producing and holding ground and learning at the same time and expanding and challenging yourself over time. Make sense? I hope so. All right, so it's noon. I'm going to let you watch, and we're just waiting on that 5 minute. Need that 5 minute in queue. And so for us, and when we do something like this, there's a lot of waiting, right? You may be thinking like, wow, we're going to be trading. All right, let's get in there and start buying and selling and buying. No, a lot of times it's just waiting. We'll be rewarded for waiting. So if an order goes in, I'll let you know. It won't be me putting it in. The machine will literally put it in. And that's something that you can do at TradeStation that you can't do at every other brokerage. They won't let you do it. They'll put on seminars about, that's sort of get a kick out of some of them because some of them I see. And they put on seminars on this and seminars on that and the psychology of trading. And there is a psychology, but they don't give you anything. And I see it and I empathize with you because I've watched that shit and I've listened to that crap for years and I paid for a lot of that crap and they would never give me the specifics of what I needed to do to limit losses and the how to. We will do that. We will do that, and we'll show you how. And you can also then take it and expand it, and maybe come back and teach us a thing or two. One of the things that happened with Stock Market Caddy that I didn't realize was going to happen, because when we started this, Susan was a little reticent with it. She's like, Donnie, you know what? We worked so hard to get where we're going. I don't want this endeavor to take away from our own trading. And I'm like, okay, I get it. That's fair enough. Um, and I said, okay, I don't think it will, but I'll keep that in mind. So that was one of her stipulations. The other stipulation was, Donnie, you got to tell me, how long this is going to be up and running, 6 months or a year. How long do you think Stock Market Caddy needs to run before it's profitable? Because we had to make an investment in more computers and storage, bandwidth. There's an expense. There is costs. And so, I said, okay, I think it will be operating in the black in 6 months or so. And then, Susan wanted to get no pro forma, like, okay, well, then what? I mean, is this really going to be worth it? Um, but it turned out to be, it did turn out to be, but we didn't set out to do it. Once again, I lost my train of thought. I was watching that in queue up there. She's getting ready to go. Oh, the point I wanted to make was one of the things that happened that I didn't anticipate, nor did Susan, was that Stock Market Caddy was actually going to make us better. And I should have known that, because when I started to first teach Susan, she looked at the markets entirely different. And she, would ask these annoying questions. And I'm joking, half joking, and it made us better, because she was seeing it with a different perspective. So we do learn from the folks that join. You're going to bring in a different perspective, and you're going to have different questions. One of the we don't change Swing Machine very much, but I alluded to it the other day. When we first came up with Swing Machine, it didn't have a profit column. It didn't. And in fact, we didn't even send out the files to anybody either. But we had a gentleman, Logan, who went on to do tremendous things with Ethereum. And he said, Don, it works really, really well. He goes, but what I think would be very, very helpful would be we're getting the entry price and we're getting all of that, but I'd like to see the P&L. I'm like, oh, that's a good idea. Okay. Logan, a young guy, but was just just full of ideas and very bright, very inquisitive. And he actually introduced us to Zoom before Zoom was Zoom. I was like, I wanted to be showing what we're doing, and we are broadcasting now on Zoom, not just to YouTube. By the way, if you're on YouTube, you might want to increase the settings. But I'm like, what's Zoom? And so we were using Zoom before Zoom was Zoom. And in fact, we had members that purchased shares in Zoom for like 30 or 40 bucks. I was like, this thing's a really, really nice tool. And then, of course, COVID hit and Zoom kind of went to shit a little bit from a customer service, because everybody started using it. But it is pretty nice. I think there are some others out there now, Yardstream or whatnot, but I'm pretty comfortable with Zoom. So, but that came from members, right? And so as we speak, we're working on other things. So we're just waiting on that 5-minute bus to come down, that 5-minute tea time, and maybe we get it. We shall see. We do these sessions not to prove an outcome. We're not. We're not profitable every single day. Sometimes we'll have a rough week. We have limits though. I do have a daily limit number that we're aware of. We can program so that the machine will just shut down at that level, but generally I have eyes on it. And there are times when we may have to just say, at this this particular strategy that we're running is just not running well today or this week because of the market that we're in. It's usually just the market conditions. They change just like on a golf course. And so we may have to be like, okay, let's stop that and run something else maybe. Or let's stop it and just trade manually. Which, if we traded 50 minutes ago, we could have picked up 800, 41 minutes ago, we could have picked up 1,000, and that's the most simplest one. It's just come in and trade the 1 minute. And we can do it with the help of the machine. Makes sense a little bit? I hope so. I can't impress upon you though, and everyone, the need to do this and to practice this and to get yourself into a routine, and it is like brushing your teeth. Presumably you brush your teeth in the morning, I hope, brush your teeth at night, you know, maybe use a water pick, you get into a routine and you want to come in and do the same thing, ideally over and over again. Even really, really good golfers, you read about the professionals, they talk about a pre-shot routine. We have even for trading, which we'll do during the Q School, a pre-shot routine for assessing swing machine and helping you decide, okay, what am I going to do? So don't look at this as like, oh, it's a red light, green light. I'm just going to get in there and throw it on, take it off. That is Indian casino stuff. All right, let's go over to the blackjack, play some blackjack. Okay, let's go over to the roulette and play some roulette. Let's go over here. Woo, we made some money. We're not doing that. All right. Maybe, the other people are doing that, but we're not doing that. Nobody cares about how much money I make. Nobody cares about how much money you make. Nobody cares. And you shouldn't care either. Only thing you need to do is to make money, have a healthy profit factor, and be able to do it over and over again. One of the biggest concerns that I have is early success. Like even before you get out of Q school, you know, and then, get successful in those first 2 or 3 weeks. And what we see sometimes happen is folks that, you know what, I think I'm going to increase my leverage. I think I know I shouldn't be trading in the evening hours, but I'm going to trade around the clock. And they trade too much leverage too fast. So we try to slow everything down. I mean, if you set out, and you have a real, and we will ask you what your objective is in both in not just in profit factor, but in dollars, but in time. And we can, tell you, if something's not realistic. I really try to sniff that out before. I have turned people aside from Q School. I absolutely have. It's not that, we have a huge high bar, but if I get the inclination that a person is not realistic in their approach or what they think it is, then, I won't go forward because I don't want them to waste their time and I don't want to waste mine. We're going to spend a lot of time with you and we want you to do well. We want you to have a good outcome. Make sense? All right. So we're still waiting here, middle of the day. Typical. Let's go look. I know what you want to see. And I know this is so different, right? Because you're probably watching your charts, right? You're going to want to see that chart. You want to see that. This is like instrument flying, right? You got to learn to fly under the hood where you can't see the horizon. And but we can bring charts up. And the easiest one here is this. This is not a daily chart per se, but it is a synthetic daily chart. And this is on the S&P. So this represents kind of like a daily view. This goes back 5 months. There's a strategy on here. And you can have these trades being sent to your phone. 5 months. Let me show you something. We were just showing our members this a moment ago. Strategy performance report. 5 months. Trading one ES contract, one. Profit factor, 3.23. 24,000. Okay, so not a tremendous amount of money. But look at how many trades. 31 trades. So you have to know that. Do you have the patience? Do you have the discipline? Do you need to be sitting here waiting for each one? No, no. But you got to know what it is. You got to know how you set it up. This is the expected performance, expected. So, you start doing this in the first 2-3 weeks and we're going the other way, then we got to make some adjustments. We want to go. But even here, you don't go from, here to here, exactly, right? You have setbacks, little pullbacks, but that's how we, but something like this would have to be alerted to your phone or to your email. So it could be running on your home machine and then you maybe take action on it. And you could, and if you do it for 5 or 6 months and you track what you do and you do very close to that or a profit factor of 3, maybe you do more, maybe you reduce the leverage, maybe you increase the leverage, and maybe that's all you do. Nobody cares. None of our other members care what you're doing. They don't care. They'd like to know a little bit, and we try to share that where we can, but they're only interested in what they want to do. Now, if you have a mindset that you want to trade much more actively, and that's what everyone wants to do, but that may not be the best idea. That may not be the best thing for you. Maybe you don't have the time for that or the discipline for that. That trading actively, you're going to be very, very disciplined on that, which we will have you doing, right? So we will have you doing that during Q School, for sure. And because you can always slow things down. Makes sense? So we're still waiting. And we may wait, this thing, we're just sitting here, right? Now, this area here on this S&P, this was almost like 10 days of trading here. This is not a time chart, but this is about 10 days. If I clicked right here, that is, that's August 19th right here, August 19th. We're already September, it's almost 2 weeks. And then she breaks this. This had been resistance. She broke through, then it became support, but she couldn't get through the old high. She couldn't get through it, and she rejected it. Now, this is now former support is now resistance, and that's now resistance. We just need to stay under that bitch. And we have eyes on it because we also have options on. And we want to make sure that, and we can count this 1, 2, 3, 4, 5, 6, 7. The next pivot down is likely to give us, when this break, if it breaks this, it's likely to give us, if it does turn here and break, likely to give us 7 more bricks. How many points? 7, that'd be 140 points. So we can even do a Fibonacci on it. We'll just come in here. We got some time. And we're going to do this sort of thing together in Q School, right? So we will use this sort of thing occasionally, not every single day. Fibonacci price extensions. No, I want price extensions. So if this turns out to be the A, take it down here to the B. And let's say that that is going to be the C point. We don't know yet, right? If it does break. 100% extension. If this is the A, if that turns out to be, and that turns out to be a shallow C, if we extend, this market would likely go to 53.48, this one. Now, I'm not going to trade based on this right now, right? And that probably, and that is a likely spot, because if we do get into here where she wedged and then got going, it probably in this area would be over here would probably give us a bounce. But I don't know how long that's going to be, right? I mean, that could be days, you know. So with options, you've got to, you know, you got to give yourself plenty of time and you have to know. So we can use technology to alert us, to give us setups to actually do some of the trading. But you also have to have, you know, some good acquired trading skill to do this sort of thing and to map them out and to understand what you're doing and so that you can work with it, right? So if you're flying the plane and, you know, you put it in autopilot and then you're flying into Tampa and there's a thunderstorm, you know, maybe you want to, you know, take off the autopilot and get the plane back to the airport. You know, do you have the skill to do that? Or are you going to be like, holy shit, now what do I do? I mean, that's not good, right? That wouldn't be good flying a plane. That isn't good if you're trading like that. Well, I'll just wrap up and I'll go at it tomorrow. Well, you gotta, you know, set up a trading plan, right? We're gonna help you work on that during the Q school. I'm gonna help you think about that constantly. And you know, after 3 weeks, you're gonna have I hope you should have a really good idea of what you know, what you need to do. And then you just need to execute. Make sense? And this bugger wants to still go up. She doesn't want to go down right now. So we're just, maybe we get a trade off, maybe we don't. Once again, we just come up middle part of the day. I try to promise Monday, Wednesday, Friday right now, middle part of the day to give you a chance to look. And if you have any questions, let us know. So I'll just kind of shut up, let you watch. Once again, if you have any questions, don't hesitate. If there's anything you'd like to, any market that you want to look at, and markets are digesting that move down from yesterday, getting a little shallow bounce. We think it's just a bounce. The program is on. We're running what we call SMC cubed. It's a 5-minute, 30-minute configuration. It's only taking 5-minute trades in the direction of what we call the 30-minute, and that's what we're choosing to run. We started Sunday at 25,000. We're at 34,068. Profit factor over 5, which is beautiful. We're making $5 for every dollar expended, and we're just and at this point, we're looking to bring our week to an end. So this is one of the things that I might do. If we get a trade off and she runs up quickly and I have a shot at picking up another 1,000 or 1,500 or 2,000, I might go in and just grab it because we've had a good week and just be icing on the cake, and then look to shut down. Am I going to be here on Friday trying to make my week's pay on Friday? Absolutely not. Now I'll be here probably doing other things, but we'll be done trading. I can promise you that. We'll be done. I won't give anything back on Friday, and we may or may not even do anything tomorrow. We did not run the program overnight, but I did place a manual trade just in case the shit hit the fan overnight, and that the cost of that trade cost me 172. It was up 700 or 800, but we had brackets on it, and nothing did happen. Your real-time gains are negative. Yeah, yeah, real-time gains are negative, Wally. That's from midnight. So that's so he's saying the real-time gains here. This is giving you a trading window of our account, and it shows you since midnight. So this basically resets, I think, at about 2 in the morning from TradeStation. So since midnight, we did have one trade, and that's the trade that I was describing. I put on one bracketed trade. It ran up about 600 or 700. I wasn't there to capture the profit. I don't know if I wouldn't have anyways. We were just putting it on just in case we sold down, and then we took it off this morning, and it lost $172.40. That's exactly right. We have we're not any, so we have no unrealized gains. This is the account equity. The account equity on Sunday at 6 p.m. was 25,000. So you can do the math in between. We already did a performance report, trade manager analysis, gave us the number of trades and the profit factor. So that makes sense, Wally? Wally Wampa. Mhm. Now, Swing Machine is doing its thing, and where this Swing Machine is automated, the program that's running, that's putting this in here. Yeah. So, are you a trader, Wally? If you have any questions, I'm happy to, any specific questions. If you're not a trader, you might want to visit our website and you'll get a better idea. When do you actually trade? Yeah. So we're trading now, Wally. Um, we're running a program that is buying and selling, selling and buying. But there's just no trades right now. So that's what's put that number together. Um, the and this is just the program. This robot that's running. Okay, you're a 40-year trader. Okay, all right, well, that's all good. Do you trade futures? Do you trade stock? We're on a delay, so I'll wait a second or two. So you did one today. Yeah. Yeah, we did one trade today to close it. Um, let me just give folks that are passing by a view too. This is just one of our programs. This is a program called Swing Machine Plus that is running. Um, futures kill me way too fast. Um, well, we we're actually trading futures, so we've been trading them all week, since Sunday night, and we've had very few trades because we're trading the 5 minute NQ in the direction of the 30 minute, and we're doing it robotically. So this 5 minute went long as an example here. This 5 minute went long 45 5 minute segments ago at 8:50 this morning. Now, we very well may have had, when we have members that have this on their desktop, if a person had taken this trade long at 8:50 at this price, they would be up $2,600. Our machine did not take that trade because the 30 minute is not long. So we can program um, we can program a whole host of things. And for instance, and you can also decide no, it's not hypothetical. It's as real as can be. For instance, on the 1 minute, if a person, and we're not doing this, Wally, for you to take trades on. So, but the 1 minute went long 12 1 minute segments ago. And if a person took that trade, you would be up, 175, $200. You get to decide how fast or how slow you want to trade, whether you're trading. Now, the reason why we trade futures intraday, because futures give us market access virtually around the clock. They give us great liquidity. If. Wally, you don't know what you don't know. I don't know what else I can show you, Wally. But let me slow things down for Wally. Let's go to a 60-minute view, Wally. If you had shorted the 60-minute as we did yesterday at 5 a.m., you'd be up $9,000. And we did. And that's what deposited the money in our account. Yeah. We're not predicting the future. We're managing risk. So if the 1 minute, and here this is the 1 minute trade 14 minutes ago, how much money would it have taken you, Wally, to put that trade on at 12:18? $2,000. You're up 700. And we can trade this robotically, we can trade it mechanically, manually, or we can trade it robotically. And we can trade it in multiple time frames. And we can trade it with multiple markets. And we can use tick. Let me show Wally something. And we can trade it with stocks. So let's go to our stocks. I love doing this. Bear with me. Let me show the S&P. Bear with me. Yeah, hindsight is easy to trade. That's okay. Feel free to give us one of your trades, Wally, and we'll punch it up real time. But let me show you. I'm going to show Wally. Doesn't quite know what he doesn't know. It's okay. He's got all the answers. Here is the, no, I want, show you. Let's see here. I want the sentiment. You have Mara now? Long stock. All right, so we'll plug it in a moment. All right, so here is this is Swing Machine, Wally. Swing Machine Plus. It's blue because it has all stock. So let me sort this, and then I'll also plug in Mara. So this is the S&P 500. This tells us whether the machine is long or short. It tells us the age of the signal. 25 days ago, it went long PayPal. That if you had bought it at 65.78, you would be if and the purse is based on a $10,000 allotment, but you'd be up 10% or $1,000. So when it comes to stock, we can come into the program. This is a decision-making trading tool, but let me just show Wally. You can set this to futures or to stock, and you can set the dollar amount that you want to put on. So what I want to show you is I'm going to sort this, and out of the S&P 500, the most successful return to date is GE. If you had had Swing Machine on your desktop, or you were looking at the nightly video, Swing Machine went long GE at $90.80 back on November 8th of 2023. A $10,000 investment would be up $8,100 or 81%. This is something called Solar Edge. It went short 136 days ago. If you had chosen to short it using $10,000, you'd be up 70%. Maybe you were long and you use this tool to exit the long, you would have saved yourself a 70% drawdown. If you have any trading skill and know how to use options, of course, your returns could be much better. But what I want to show everybody is I'm going to scroll down and show you how we're positioned on all 500 stocks. Now pay attention to the number, and we're going to scroll down. Now Swing Machine is long and short, but this is the return of all these stocks. Now he does not win on every single trade. Right? We had a pretty good trend down, but you can see the percent return, which is what stock traders are accustomed to tracking. We actually track profit factor as traders, but we'll keep coming down. It's still profitable, long and short. We get all kinds of trend information. Let's scroll down, keep scrolling. Still profitable, still. Okay, we're getting narrow. It's going to turn yellow in a moment. Those who are trades that are even. Still profit. Okay, so now at this point where we start to turn yellow, these are trades that are even. So out of 500 stocks, we're profitable in 400. Now let's keep going. We're going to show you we're profitable. We got a couple little draws, and then we will experience drawdowns, and you start to see the drawdowns. So out of 500 stocks, we're profitable in about 400 and flat. We're profitable in about 415. Usually we're around 430, 440. But you do see the drawdowns. So these are drawdowns. These are trades that if you took the symbol, you would have be down. I'll read your, I can't monitor the chat function, which I will come back and read it in a minute. So the worst trade is this one down 6%. Now, what the machine will do that most retail traders won't do, and that is it will exit. It doesn't get emotionally attached. So Swing Machine is a trading tool. You can use this to sort for yourself if you have any acquired trading skill, especially when it comes to options, and you can choose, whatever you like. Now, let's just plug in. I'm going to do this. Going to add a blank row. I'm sorry, a label row, and I want to plug in some stock symbols that Wally asked. So let's add label row, and then let's add another blank row. Okay, so he's got a stock. I have Mara now, long stock, covered call. Okay, so let's look now. I have no idea what Mara is, so let's plug it in. So if I had somebody that on Reddit or something, well, I'm not sure what those acronyms are. I'm not a broker. I'm not a financial advisor, and I'm not making specific recommendations for anyone to buy or sell anything. But let's put in Mara. On a daily basis, our machine went short Mara. What is that? Marathon Digital Holdings, 25 days ago. So if I owned Mara 22 days ago, I would have gotten a sell signal. I would have exited the trade at minimum. If I was a trader and I shorted at 1967, I would be up 22.16, or if I exited along, I would have saved myself a 22% haircut. So let's change this though. Let's add another label row. Wally, I'm impressed. I want you to know that I taught surgeons for 25 years how to do surgery. I'm not from Wall Street, and I'm not from Madison Avenue. Proudly to say that. Let's delete this row for a moment. Here we go. So we're going to put in a excuse me, add a blank row. Let's add another blank row. Let's put in Mara up here, Mara on a daily. And let's put in Mara again. And let's change Mara to a weekly time frame. And Swing Machine is shorting it again. I'm not suggesting anybody short Mara. And let's put it on a monthly. And Swing Machine 8 months ago would have gone long on a monthly basis. Maybe that's where you went long at 25. And that is done horribly on a monthly basis. And you'd be down about 40%. So this is what we would have done. We would, when we trade on a month, we don't trade monthly timeframes. We would consider the monthly from an investment standpoint, but we're going to manage our monthly trades using shorter timeframes daily and certainly weekly. The fact that Mara is short on a daily, I wouldn't be buying it now. And I'm not going to buy it, to sell a covered call against a declining stock. Yeah. And so he wants to look at Riot. let's put in Riot on a daily basis. Same thing, Riot is short 24 days ago. And he tells us that this has to do with crypto, so that kind of makes sense. Weekly, it's short, and monthly, it's short. So I'm not going to own it at all. As an example, but you can do whatever you want. And so we'll remove those. Sure. So we can put in Bitcoin. Maybe I did it. We'll stay there. We'll go ahead. Well, no, we'll do it on our futures platform here. Let's go to Bitcoin. Intraday. Let's go back across. Intraday. And let's go get Bitcoin. So here is Bitcoin. This is a 5-pack Bitcoin on a daily basis. And let's add in a label row or a blank row. And we'll add in another one. So on a daily basis, Bitcoin went short 24 days ago at 63,035. And this is what we suggest to folks. If you own Bitcoin and don't want to sell them, don't sell them, but learn how to hedge them. If a person had 5 Bitcoins and they didn't hedge, they've lost 23,500 or 7% of their account value. If they came in and hedged 5 coins, they kept the coins and shorted in the futures market 24 days ago, they would still have their coins, but they would also still have approximately 23,500 in value. Bitcoin on a weekly basis, let's take a look at swing. And we can change it to a weekly. On a weekly basis, Swing Machine is long the 5 coins. This is the 5 coins futures for 47 weeks. It went long at 35,000, you'd be up 63%. And on a monthly basis, Swing is, and this is for everybody. So I'm not just, speaking to Wally here. We don't have a fundamental opinion on any of this. We're tracking money flow. So we don't. So Bitcoin on a monthly went long 12 months ago at $40,000 a coin. And if a person had done that, that's how much they would be up. But I would be hedging all the way. Your historical ifs, yeah, whatever. I don't know. Let me look here. For some reason, I can't see you. Well, your historical ifs never very convenient. I can't read the other comment because the damn thing gives a heart there. I don't think he's sending me hearts. Let me go look. You never lose. Very convenient. No, we're not saying that. They do lose. So you didn't listen very well. Swing Machine does not win on every single trade. It does not. What you're seeing is a disciplined entry and disciplined exit. What Swing Machine will do that retail traders won't, when we come back to here, is they will hold on to stuff like Mara, hoping that it's going to go back up. Swing Machine won't do that. It will get out. So we'll come back and put in Mara. And Swing Machine on a daily basis is not buying Mara. You don't have to short it, but it isn't going to buy it. Retail traders will buy Mara on a fundamental belief that crypto or a stock is going to do this, that, or the other thing. That is forecasting. That's Ouija board. This is mechanical. And it's an acquired skill set. Let me see if I can read your comment. It's getting cropped off. I'll try to answer your comment. Yes, this is Swing Machine. It's blue because it's on stock. Swing Machine was developed by my wife and I about 24 years ago. And it is reading. I'm just going to put it this way. It does not use moving averages. It does not use stochastics or MACDs or any of that traditional. It is looking at packets of price information. That's all I can tell you. And it's about 800 lines of code. It is, please understand, it is central to what we do. It's our flagship product, but we have over 70 proprietary tools that we trade. But you must have, see, most people, the entire, yeah, the NASDAQ, absolutely. So let me go there. Yep. So here's the NASDAQ 100 on swing. Let me just bring it up into view. So this is Swing Machine with a NASDAQ 100. On a daily basis, we could change this to an hourly basis, right? But we don't trade stock intraday. It isn't tax, it isn't, you have to deal with liquidity. The liquidity isn't always there. It isn't tax efficient. It isn't capital efficient. So we don't trade stock intraday, and we don't trade stock for a few days or even a few weeks. We don't. We trade futures intraday for market access, for liquidity. We don't have to deal with the Greeks. We do trade swing going overnight out to about, our sweet spot is 35 to 45 days, and we trade options because we can define our risk and we get, but we do have to deal with the Greeks, and we deal with them. If we're going to buy, and we're not going to short, and I don't think this may sound like heresy. I don't think retail folks should even be involved in shorting stock, not shorting individual, shorting future. I'm talking about shorting stock. So we don't really, sometimes we'll do it with options, but but we're not shorting stock. If we're investing, we're buying stock, and it's going to be for a year or 5, much longer view. And that is the only time we will look at the technicals, but we will make a fundamental analysis as well, if it's going to be an investment. So I do want everyone to know that. Let's just go and look here. So I'm going to sort this. Once again, the purse is based on a $10,000. You can put in any amount of money, $5,000, but the purse needs to know, and we put in a dollar amount versus a share amount so that we get an even view. So I'm going to sort this, and we're going to look at them all. So the top performing stock is, of all things, Walgreens. On the short side, Walgreens has gotten killed. It's at an all-time low. So if your broker or your booker put you into Walgreens, I'm sorry. But Swing Machine would have told you 160 days ago, you might want to get out. On a daily basis at 22.17. If you got out, it saved you a 60% drawdown. If you were an aggressive trader and you shorted it, then yeah, over 160 days, you picked up 60%. Again, I don't think I'd be shorting a stock outright, but I might use options. So let's scroll down. Now, on the positive side, this thing here called Sept is long 227 days ago. But what Wally Wamper wants to know is, out of 100 stocks, I'm going to show you in less than 5 minutes the stock, how Swing Machine is positioned, when the signal came in, how many days ago, how much it's up or down, the percent return, which is the difference between the entry price and where it's trading right now, the date it entered, and then there's a ton of other information over here on trend and on the fear gauge, which we just don't have time to get into. But what he wants to know is, out of 100 stocks, how many is he profitable in? Now, Swing Machine presents more opportunity than presumably one has money for. I mean, we don't have a position in every one of these. We have, if I had your money, and maybe I would. But let's just show you. Let's keep scrolling. We're still profitable. It's marginal, but we're still profitable. Bingo. All right. So out of 100 stocks, 80 at this moment in time, 80% are profitable. The yellow mean we're flat, and now we're down. So out of 85 out of 100, we're either profitable or flat. Now, some of these, trades have been here for, for days. And then the red. And so we do have drawdowns, and he will have losses. But what he will do is he will kick them out. And so the worst trade is this one that went long 2 weeks ago on Broadcom, and he's down 6.23%. But he will kick it out, where a retail trader generally, will get caught up in the noise of a stock and the emotions of the stock, and but he will kick it out. I mean, it's either going to resume. Now, the likelihood is that Broadcom is in fact going to resume her uptrend. So I may not buy Mara, but I might, be tempted to buy Broadcom, and I might buy it. And maybe sell a covered call. What I would maybe rather do is maybe sell a put credit spread on Broadcom, something like that. We also have tools to give you. So when we trade options are all math. All math. OTC, over the counter, you can plug anything in as long as we have as long as you have the feeds for it. Now, also too, I don't know where everyone is from. If we have members that are all over the world, you keep saying he, could be she. Yeah. Swing Machine. We'll call it she, or they, or them. This is SMC Defined Risk Club Selector Radar. So options to us are all math. We think the problem that that people make when trading options is they're looking at charts first. We think you should look at the math first and then look at a chart if you want to. But they're all math. So what we can do is Swing Machine, it isn't Swing Machine, it's Club Selector Radar. This gives us, on these stocks, defined risk options for 30 to 45 days. And so it'll tell us put credit spread, which we love to do, buy a call, and here's a debit spread, and here they are. On the dark side, here are the stocks on the dark side that we would be looking to fade. And you can certainly take these, and you can see the phantom vignettes. You see all the phantom vignettes? They were there last night, but they're not there now. So if our members put those on at the end of the day yesterday, they're presumably a little bit in the money, a little bit. But this is where we get them. And if you want to do iron condors, here are iron condors. They show up on both sides of the ball because they are a neutral strategy. And these would be the best stocks today for iron condors. As an example, you've adopted your brainchild. I'm not sure what you mean there, but that's okay. Let me go look and see if you've adopted your brainchild. Don't know what that means. I'm an expert in options in Greeks, but doesn't it all come down? No, it does not. Yeah. Nope. No, it doesn't all come down to direction. And we also can come here to our defined risk options here, our expected move radar. So here we have the entire S&P 500. Now you can plug in any time frame and we can give you the expected move of a stock on any given day. Here, it's not going to give you direction. It's just going to tell you what the options market is expecting this to do. So for instance, if we want to go out 15 days, I can just click on this. This stock is expected in the options market, advanced auto parts, to move 31.9%. That's what the options market is pricing in. Now that move could be up, could be down. My guess is they have earnings somewhere between now and 15 days. But this is another tool that if we're trading options that we can use to screen to find out what we want to do. And maybe we take some of these stocks and we can copy them and paste them into another tool. Could be Swing Machine, could be another. Yep. If you gapped on IC, you'll pay heavy. Yeah. So these are all our babies. We've spent years building these and we trade them all the time. Let me show you, we're just giving you a glimpse. So go to the website and check it out. But let me show you, before we had Swing Machine, for those of you that like to read candles, this is a tool called the Pebble Beach Radar. This is the Pebble Beach. SMC Trade Generator Pebble Beach Triggers. Now I got some writing in here so you can't see. These stocks are the S&P 500. All of these signals are today. They're all today. Here's the entry date. And let me scroll down. So today there have been 29, not 30, because we have a label row. So if you had this on, now the trade purse is based, okay, and now that trade that just went in, that is our program. So I did not put that trade on. The trade just went in off of our program. So it's long the NQ. This trade purse is based also on a $10,000 investment. So this signal came in today, Centene Corp. The entry price was $77.35. A $10,000 investment is up $500, $535. That would be 5.35%. They're all today. Now, it's possible on some of these signals that there could have been a gap. So let's go click on CNC, and there is a gap. Could we have gotten, the machine wanted 77.35 and you wouldn't have been able to get it because it did gap down. So it's possible that some of these could gap. Most of them don't. Take out the label row, where these are all short signals today. There are some buys. AMT, here was as an example, on the long side, the entry price is 221. Could you have had that? It opened at, there's a little gap there. Actually, this is showing up from yesterday. This is yesterday. So it's either, most of them are going to be today, but it could be showing up from yesterday. These signals, there are 29, and it's profitable in all but 2. So what we're not doing is we're not running around and going from screen to screen to screen and have 15 screens and looking at all these moving averages and stochastics and MACDs and candles and throwing money here, throwing money there. We're not doing that. And this can all be programmed to trade. So let's go back. And you can trade as fast or as slow as you want. So Wally said, you assume a lot of funny. Do you know of Magic 8? Nope, not familiar with Magic 8. Let's go to the Renko chart. The other thing is everyone is using price charts. Excuse me, time charts. We will use also price charts. This is a particular program that is running the S&P on a price chart. Everything that you see on this screen is being printed by the computer. You might favor the short side. Distribution underway, brick value, and then we even have another tool that's being blocked here, and it tells us on divergence. Yeah, okay. No, there's nobody. On Swing Machine has over 800 lines of code. There isn't anybody that has Swing Machine. There's nobody. So you can pump it someplace else, Wally. I'm using this particular program has been runs over the last 5 months. Now, what happens in the past may or may not happen in the future, but there's only been on this program just 32 trades. To give you a glimpse of the performance report, one mini contract, profit factor 3.23. Wally, do you know what a profit factor is? If anyone else has any questions, let us know. It's 1 o'clock. We're going to need to get back to business. We happy to answer any of your questions. We invite you to visit the website. You're welcome to call us. And we're not making any claims whatsoever, Wally, that we're not going to give you any specific trades. We're not making any claims whatsoever that if you subscribe to us and or if you get these tools that you're going to be automatically making money. These are tools. These are decision-making trading tools. They're like, an autopilot on a plane. They're like a skill saw at Lowe's. If you go to Lowe's and you buy yourself a skill saw, it's not going to automatically build you a staircase. You need to have good carpentry skills. We'll let you watch. Any questions? You're on a little delay. We'll let you watch. The trade that is up here is placed by the machine. It's being accounted for down here, and it is running the 5-minute swing machine in the direction of the 30-minute. We can run multiple time frames, multiple markets. So we can even program and do to take trades on the ES as an example, based on what the VIX might be doing. We might trade gold based on what the dollar is doing, or vice versa. And my wife Susan is at the gym, Wally. Amusing. Trust me, we don't accept everybody. I am not impressed. Trust me. When someone tells me they're from Wall Street or Madison Avenue and that they're an expert at this and an expert at that, and they've been 30 years in the business, that does not impress me. When it comes to the markets, I am the most ignorant person there is in these markets. The most ignorant person. And I will arm wrestle you for that right. I am humbled by these markets. We set out to build these tools, Susan and I, 24 years ago. I have also been involved in the markets for some 35 or 40 years. I have fired more brokers and brokers than I can, shake a stick at. We developed these tools to get away from them entirely, to play our own game. And that's what we do. Stock Market Caddy came about in 2012, simply being that I was bored. We approached trading in the markets from our frame of reference. Mine was working with surgeons in surgery. I was wearing a surgical mask when it wasn't fashionable. I spent years with them. They don't wing it. They're surgeons. I wasn't touching a patient, but we were working with some of the most advanced surgeries, and the surgeons would do exactly the same thing day after day after day, from patient to patient to patient. My job was to help them maybe change one little aspect of their surgical approach to improve their surgical outcome for their benefit, hopefully, and for the benefit of the patient, and maybe the benefit of the hospital. That was my job. I was not obligated to be able to get in. I had to be able to speak to a surgeon, and I had to be invited by him into surgery. If I didn't have his confidence and his trust, I couldn't get into surgery, and I could have never done my job. I never had a biology class. I am not a surgeon. I am not an expert in open heart procedures, right? But I was trained, and I had an ability to take complex matter and make it simple, not for the surgeon, but for me. so that I understood it. The company spent tremendous amounts of money on my education, and I had to convert that information to something simple so that I could converse with them and to work with them. Susan's experience comes from IBM and from Lotus Software. And I will brag about her for a moment because I tried to go to work for IBM back in the day and they didn't hire me. When Susan went to interview, I'm like, I'm not going to hire you, Susie. I interviewed with them. Well, I'm going to interview with them, Don. They asked me to interview. They did. She got the job. I found out later because they sent her a letter. They said, Susan, by the way, we had you take a test as part of your interview process. This was like months later. You're Mensa. I'm like, what's Mensa? They gave her an IQ test. She's got a very, very high IQ. I married up, and that's for sure. And she's extremely good at math, but she didn't know anything about the markets. And I only knew a little bit of what I had been doing, the IBD, the VectorVest, that whole program. But we sat down, Susan and I, in the early 2000s, across from the table. We had survived much of that. We had done very well. And I said, Susan, the markets are rigged. They're scammers. There is nobody more cynical than me when it comes to the so-called experts. I don't want to be anywhere near them. And I did not. We had gathered those assets. I wasn't about to turn those assets over to the so-called experts. So we set out, and Susan's next question was, well, then what do we do, Don? So we're going to put our heads together and we're going to get this figured out. And we're going to learn to trade and invest responsibly and in proportion. And we're going to do it as if we were surgeons, a surgical approach. I was very close to calling it something along the lines of surgery, but I didn't think that it was interesting to me, but maybe a golf theme would be a little bit more fun. So I am not the smartest person in these markets at all. I am not an expert. I'm not going to tell you that at all. No, we've just learned a lot. And we've built some fantastic tools. And none of these tools are available on Discord or any other place. It's absurd. Okay. And so I don't like someone coming in, Wally Wamper, probably hawking something on Discord, and they come in and they shadow is what they do, and then they want people to go and what they do. We get that all the time. What do they say? People who copy you should be flattery. It is, but there's a lot of crap out there. Our memberships are set up. If you think about it, we've had a number of folks, and I want to say thank you, have joined at a monthly basis. They're month to month. I will never ask you join up for 6 months or a year. We don't do that. They're month to month. If you're learning and getting good opportunity, you'll stay. If you're not, you'll leave. We hope you'll stay. We have a very, very high retention rate, and most of our members are monthly. It may be a few months. It may be a few years. One of the persons who is an annual member, he's in Germany, he's been with us very long, several years now. He was a monthly member for like 3 or 4 years. We won't pester you or bug you to, when you're ready, and if you want to join, you'll go through what we call the Q School, provided we've had an opportunity to meet, right? But if you're going to call me up and tell me you're an expert, well, then you're an expert. We need to be compatible and to be able to work with each other. And that's the beautiful thing of doing what we do. Right? We didn't have to set up. We don't have to have. When I set up Stock Market Academy, I said I would do it for just, a very small number of people. We're not trying to mass produce anything. This is very individual. If you want to spend $15,000 and fly out to Napa Valley and have wine and cheese with one of the Nigerian boys, you can do that. We're not going to do that. But if somebody wants to do that and there looks like sounds like there's plenty of people to do it and they sound like really nice guys, maybe they want to fly out to Vegas too and go to a show. We're not doing that either. So, and I can't tell you how many times we get phone calls from Chicago. And a lot of them are folks that were trading in the pits and they lost. They don't know what to do. And I don't really take them on either. As I said to one gentleman, when you were in the pits doing your trading, if I was to have called you up, which you weren't really available, would you have given me 5 minutes of your time to tell me about the markets? No, no. So I have a healthy skepticism of the so-called experts in New York and in Chicago. I really do. And in a perverse way, in a healthy way, my way of getting back at them is if I can help average people, salespeople, pilots, just average folks learn how to play this game and carve up the so-called experts in Vegas, Chicago, and New York, all the all the better. We love doing it. I'm going to let you watch up until the bottom of the hour. The trade is having a little bit of a drawdown. We're not too concerned, but I'll try to let you watch and answer any questions. Be sure to visit the site, and if you email us, and you're welcome to call, except Wally. Have fun. Just to comment as well, we will sometimes have folks say, um, they get a nightly view of all the algos at night. Um, and they might say, well, geez, I want to have an alert. I want to have an alert service. And there are services out there. There's tons of them. You pay them $100 and they send you alerts, but you don't know anything about what those alerts are, right? Um, what we're doing here is, especially, for those that really want to up their game and take control over their own destiny, as an annual member to Stock Market Caddy, you have all of these tools on your desktop. And more valuable than any one tool is the education on how to use them. So you can build your own alerts, set up your own alerts. Now, they could be from our programs, one of 70, or they could be your own. But then you could have Swing Machine. For instance, there was an alert right here going off on the 5-minute ES right here. It lights up white, and it's just getting short now. If that's the alert you want, you can program it. We can program anything that we have, or even anything that you want that's part of the service, so that it'll generate an alert, and that alert could be sent to your phone. At least then you know where the alert comes from. I give you, for instance, we had a gentleman, and he called and we talked, and very nice guy. And he said, I've been trading options for, like 5 or 10 years. I think it was 5 years. I said, okay. And he said, how are you going about it? And he goes, well, I have this service that I subscribe to, and this guy sends me like 10 option trades every night. I'm like, okay. And then, so what do you do from there? He goes, well, I just kind of pick and choose, and then I put them on. I'm like, all right. I said, you've been doing this for 5 years. He goes, yep. I said, how have you done? He goes, well, I haven't really made any money, but I haven't lost any money. I'm like, okay. And you've been doing it for 5 years. Yep. And then I said, do you know how he generates those opportunities? No. He's never available, doesn't tell me how, just that's what he does. I'm like, okay. And then I just asked, you've been with him for 5 years? Yep. I said, have you earned anything? Anything? No, nothing. Not learned a thing. Okay. That's not so good, right? We're doing this, yes, to make money for sure. We don't track our success on money. Wally probably does. I don't think he liked the fact that Swing Machine was short his Mara. You don't sell, by the way, covered calls on declining stocks. That's not a good idea. So once again, you don't know what you don't know. When you sell covered calls, you want a market or a stock that is flat to going up. What he probably did, he went into Mara. That was the stock. The Swing Machine has it down. We sold it, 2 or 3 weeks ago. It's down 22%. And now he's trying to get his money back. So now he's going to sell a covered call, trying to get his money back. He'll just get mired into it, and it'll just be turned into a big fat loser. You don't want to sell covered calls on declining stock. But the other piece was to to our member, to have spent 5 years and not have learned anything. That's not so good. That isn't good. So the most valuable commodity of all is time. So she's having a little bit of a draw. If the NQ, now we can see, you can't see the 30-minute right here in this view, but if the 5-minute goes short on the NQ, she will exit that trade, and we may have ourselves a loser. If the 30-minute is not short, which I don't think it is, it won't go short. So we're kind of, in between. So we'll see. And that's it. And I don't sweat it. Now it was kind of funny, he's been trading for 40 years. So there's a couple of things that were a little bit odd there. trading for 40 years, but doesn't trade futures because they're too fast. That doesn't make sense. Something didn't sound right. Um, Trading 40 years, um, buying and selling, crypto stocks, Riot and Mara. It sounds a little, and selling calls against them on a declining stock. It didn't sound right to me. My bullshit detector was going off. Swing machine is, if I didn't call it swing machine, I actually thought about a market polygrapher, catching the lies. Mm. Okay, so the machine just took that loss. Let's go take a peek. Oh, you know why? It didn't go short here, but that program has a stop loss that we optimized at $1,000. And that's exactly what we lost, $1,000. That's what got hit. So it's the stop loss, and that's fine. And we will do that. We may have a program that has wonderful exits and entries, but then we may, and we did in this instance, and we ask the machine to tell us where it should be placed. We'll place a stop loss to prevent any kind of negative outlier. We don't want to get caught or trapped. And I don't think this program would have, um, but it's the price we pay. That's all. We want positive outliers, but we don't want negative outliers. Zero, none. Makes sense? So, this tool, now I don't track Reddit or Discord. I'm not doing that. But and none of that's new, right? Back in the late 90s, it used to be the Yahoo message boards and stuff. So, I can't be bothered with that. God, no. But if you are, that's fine. Um, Let me just show you. Um, if you come back to Swing Machine, let me just look here. And you come across somebody like that mentions a stock to you. Maybe it's your broker. Maybe it's a financial advisor. Maybe it's, I don't know, the Motley Fool guys or someplace or Reddit. What you could do is simply come into um, Swing Machine and plug it in like Mara. So it's Mara. It's a crypto miner, and crypto's going to $1 million and $2 million, and oh man, I'm gonna plow into this thing. And okay, well, that's fine. I mean, you can hear all that, but I'm gonna do what I just did. I'm gonna plug it in. HB, by the way, stands for hard to borrow. So the thing is massively short. At least TradeStation's not going to take any risk with it. And then they all want to play the short squeeze game. But it went short 25 days ago at 1967. $10,000 investment. If you put in, is 23%. It's lost 20. Person's lost 23% of its value over the last 25 days. So then what they do is now they're down, right? They took a speculative bet on it. It goes south, and now they want some of their money back. So they sell a covered call against it, and they will make a little bit of money if she keeps going down, but they could give it all back. You would have wanted to sell the covered call at the time you bought it. But we don't have a buy signal, and if the call goes against you, you want to close it out. But that's when I hear somebody saying, I sold the covered call and I look at the stock and it's declining, I know what they're trying to do. They're trying to get their money back. Well, good luck. You can get trapped in those things. You want, when you're selling covered calls, you want a stock that is flat to up. So you might want to come in on something like this, like, I'm not saying you do it, but like Goldman Sachs. But you got to buy 100 shares. That'd be like 50 grand, so we probably don't have that. But um, we got any others in here? These are all short. Let's see, GE. If you came in on GE and you bought 100 shares, when it's going to be what, 16,500, and she's trading at 165. She's trending up. She's done well. She's up 82%. You buy the stock, and you sell a covered call. One strike up, one or two strikes, probably just one strike up. It's probably 167.50, maybe 170. For about 40, 45 days. And then if the stock continues to dip and the call goes to shit, you buy it back pennies on the dollar. Then you reassess if you want to do it again or not. Maybe these are huge moves. Look at this. This is Dollar Tree, right? A retailer, usually a state. Swing Machine went short 120 days ago. If some broker or broker put you in Dollar Tree at and didn't take you out at 125, I mean, you're down 49%. And you know what happens when you have, let's say you got $100,000, God forbid, in Dollar Tree, and you now have 50. Now you got to get 100% return to get back to even. That ain't happening. Not with Dollar Tree. Nope. Good luck trying to get that back. So Swing Machine, you don't have to short. It's like I say, it's probably not a good idea. And you wouldn't short, Walgreens even at 876. And you may not have even wanted to short it at 22, but you just don't want to keep averaging into it and keep averaging down. And that's the other thing that the so-called experts will do. They'll tell you, okay, hey, Walgreens really been beaten down. It's off its high, of 22. It's trading at 876. You got like $20,000. Let's buy Walgreens. Let's, get a really good deep value and let's buy it. And then the thing goes to 5. I'm like, well, you know what? Let's average down. Let's get another 20,000 of your money and let's average down. Cause I mean, it's, we just get back to where we were and then, we'll be profitable. And they keep averaging you down. You never, ever, ever average down, ever, with one tiny exception. If you are going to put some options to work on an indice and in advance, you've got it mapped out, you're going to be picking up, multiple options, and you're trying to get the range. Again, options are like, crab pots. We're just like playing horseshoes. You're trying to get in the area. So then we might average around them, but we know in advance that that's something we're going to do. But otherwise, we're not doing that. But that's unbelievable with the drugstores. CVS is also getting smoked. You take something like Iron Mountain, this thing went long 92 days ago at 78.19. Maybe you thought it was rich, but you buy it at 78 and you sell calls against it at 80, 81, 82. 35 days. Collect it, do it again. If it's in a retirement account, just buy it again, sell some more calls against it. But you want a stock that's trending up, not trending down, because you get trapped in them. And Mara's a dog. It's a dog. And on a weekly basis, he's going to be in it a long time, because on a weekly, it's just getting short now. It's just getting short now on a weekly. So this thing, I don't know where the hell that's going. And it's not even on a weekly basis, not even in panic yet. He's panicking, but but it's not even in panic. So it could go a lot lower, especially if the Bitcoin, and he said it's tracking Bitcoin. Why not just trade Bitcoin? Expert? I don't think so. Sorry, but I don't think so. Okay, everyone. We're going to see the 30-minute on the NQ is still long. She's actually underwater. She may trip off at the top of the hour. If she does, and the 5-minute trips off, we might get an order. So we'll see if we get it. I'm not going to put it in, right? I'm just going to let the machine do it. That's where the edge comes from, is having the ability to say, hey, I'm not an expert. I'll let the machine do it. I'm just, I'm just going to just try to help it out. It's going to help me. I'm going to help it. So if that 5-minute goes short at 2 o'clock and the 30-minute can trigger at the same time, then we will be short. And it looks like it'd be a decent trade, but let's see what happens. I'm glad the stop loss kicked in because we'd be down a little bit more. Any questions on who we are, what you're looking at? Don't hesitate. I think a person should be. I'm skeptical. I think skepticism is good. I think it is good in life, especially in this endeavor. I think it should be. But I do draw a distinction between skepticism and cynicism. There's a difference. And cynicism isn't, I don't care what it is. It may not be the best of emotions, But being skeptical, yeah, if you have some questions, I'll treat you with respect. If you can do the same, that'd be much appreciated. I'd be happy to do that. Right. We're trying to, when we do these sessions, we're trying to give you a chance to see, to see something that you're probably not going to see elsewhere. Can you explain that again? Not sure I understand the 5-minute chart in Q reference. He's saying that the 30-minute is showing long. Yeah, exactly. Let me go ahead and add it in here. Good to see you, Darian. Let me add it here. We don't have it up on the chart, but we can put it on the radar. So I'll give you an idea. Data, add blank row. And let me put in I'm going to put in the NQU24 here. We're going to change that to the 5-minute. And then I'm going to put the continuous in on the NQ here. And I'm going to change this to a 30-minute. And the program is doing this. It's taking the 5-minute long and short. And it's trying to, yeah, no problem. Yeah, no problem. Take your time, Darian. Darian's a new monthly member and is going through. We have some tutorial videos on what he sees on the nightly videos. And so what we do know is in 2 minutes, the 30-minute is gonna, there's the potential for a change. It may not. And if the 30-minute does go short here, it will take it. It is programmed to take it, regardless of what the 5 is doing. It will take it. But we'll just let it play out. But it's basically the program is running the 5 in the direction of the 30, long or short. And there's a couple of little other caveats to it, but that's what we're seeing. So we'll leave it there and see how we do. Let's bring this back up. This is what we've been running, and last week it did over $5,000 for us, fully automated, and we did very little intervention. I think if we had intervened a couple of times, I think we could have done last week 10 to 15. So that was the reminder yesterday. It was like, we had a really nice big fat trade going. It's like, let's go ahead and take that. Let's let the market pause a little bit overnight. We may have been a little early to turn it on, but and we'll put it back on. Now, I do have a very casual eye, right? I'm not burning a hole in the account value, but I'm not in all likelihood going to let this account get much below 32 or 31, certainly not below 30 at this juncture, because we're running out of time, and I don't so we'll give it a shot. And I might be aggressive if this trade goes off and we get, a nice fat winner and clear up that $1,200 drawdown there for today, we get up a little bit, I might just go ahead then and just take it. We can do that. You can do that. The difference in my psyche is, okay, so yeah, she is, okay, so the 30-minute is, she is short. She is trying right here, actually. Let's see if this goes off. She's right on the head of a pin. Hey, Scott. RIP is just that. It's a okay, so she did not go. Why didn't she go? Okay, we need maybe another minute in this to go. We'll see if we get it's 2 o'clock. My trade computer time may be a little bit off than my computer time, right? Trade time. We'll see if they get it off. When you are trending up, you have higher lows, right? That mark a trend, right? So when you are doing this, Scott, let's do this. So when you are trending up, it may look something like this, right? And you're going up. I shouldn't make it so fat there. These are dips, right? And you do in fact want to buy the dip. And when you're trending up, when you're trending down, it's going to look like this, right? Down. These are rips. Rips. You don't buy rips. You sell rips. You look to sell them because we're trending down. If you continue to buy the dip when you're trending up and then you start trending down, you see everything as a dip to you and you buy the dip, you'll give all your money back. But you've got to define, what the pull ups. They rally. You might think of it as rally in price. It's a rally in price. So yesterday, let me show you. Let's go to the Renko chart on the S&P. Remember yesterday down? So what happens is, let me just draw this out. Let's just pick it from here. We rally, we pull back, dip, we rally. Lower highs, or higher lows, right? This is a dip, we buy it. This, we break down, we rally up. Now, everyone who buys the dip, they bought today. Now, it may come up, but they took out the swing here. So the likelihood is that this little rally is nothing more than a rip. We're declining, but we rally up in price and then we break down and go down. That's what it'll look like. So when you're trending up, you buying the dips is fine. But when you're trending down, you sell rips. And let's go see. I got to make sure that program was on. Yeah, it did not trigger. It just didn't trigger. So we didn't get it. So we're a good 30 minutes away from another order. So we're gonna need these computers, and I got to get back to work. I want to wish everyone the best. I want to say thank you for stopping by. I'll take a minute. Gotcha. I understand dips and rips trending. I'm not sure if it meant something different. No. Yeah, it's rip. In fact, well, wait a minute. Hold on a second. My clock must be off. Well, no, I take it back. It's the 5 minute. Okay, it's the 5 minute triggered at 2:05. So it did register the 30 minute. So hold on. Let's let you watch. So the 30 minute at the top of the hour did in fact confirm short, but it didn't go in. I was kind of thinking that it might. I have to go take a peek at that. But when the 5 minute confirmed short at 2:05, then it did put us in. So we're now in the trade in the direction of 30 minute. So it's the first short trade that we've had all morning, and it's confirmed it's going to run. Well, we hope it's going to run, right? Now, if the 5 minute, the 30 isn't going to change for at least 30 minutes, right? It's in. But if the 5 minute goes long, it will exit. And that wouldn't be good. We'd probably have a loss. We also have a stop loss governing, on this as well. Now we could, intervene on that trade, and I might, if we run up fast, but we'll let you watch this. So I was ready to sign off, but I want you to see it play out. So I didn't put on any of those trades. So I put on one overnight, and we lost about $200, I think it was, or something like that I put on. The machine lost, yeah, I lost like 200, and then the machine took a stop loss. So since midnight, we're off of our highs. We're down. We have a dry down of 1206. For the week, we're good. Let's see if this trade can clean this little one up and maybe get us another fat trade here for the afternoon. So we'll let you watch it. What and we do this during Q, right? So I just want everyone to know it depends. The basics are the basics. Trending up, trending down. But markets also go sideways. In fact, they only trend about 30% of the time. 70% of the time they're going sideways. So, we like to trade the trends as much as we can, but we can also counter trend. And sometimes you have to counter trend if the market gets real choppy or is going sideways. Also, there's many different charts that you can be using. Swing Machine is using time, a time-based view. Whatever chart you're using, whatever interval you might be using, you saw us map it out on Renko. You want to be able to, before you put the trade on, be able to readily identify what the trend is doing. Because if you don't know, then you don't have a reasonable expectation of outcome. And if you don't know what to expect, you're going to be anxious. And that's the case in almost everything in life, right? If I hit my 7-iron, I expect to hit my 7-iron 155 yards. Don't laugh. But I don't always hit it 155, but I expect to hit it, 150. I might hit it 160 if I'm, in Denver, the wind's in my face. I may only hit it on 130 or something, right? But I have an expectation of hitting at 150 to 155. So when you're doing your trading, you want to be able to recognize what type of trade this is and the characteristics, the outcome characteristics between a trend trade and a counter trade is all important. The other thing is too, by the way, the other gentleman there, I don't know, something was off there with Wally. Nothing personal, Wally, but he was talking about, that he was an expert in options and saying that it's all about direction. No, couldn't be further. That is not the case when it comes to options. I mean, direction is certainly part of it, but the implied volatility of options, the duration is just as important. And that's the case why most people will lose money when it comes to options. They just can't get it out of their head. The direction is important, but and the same thing like moving averages, everything is a moving average. We'll see how we do here. Any other questions, let us know. In golf, one of the hard things for, and I'm not a pro golfer, right? I'm not, but is that new folks that, pick up golf, they want to steer the club. They want to steer the ball. They want to bat it, they don't swing the club, and they grip it too tight and they're trying to bat it. In golf, you want to have a loose grip. You want to have good fundamentals, a loose grip, and learn to swing the club. Let it swing, and it will impact the ball, and the ball will go, right? Hopefully in the direction you want, right? More or less. But that you have to learn that, and you have to be shown. Same thing is true in trading, in my view. Just having worked with a lot of folks, sometimes they want, all right, I'm going to put the trade on. All right, here it goes. All right. They're rooting for it. They're grinding on it. You have to learn to just loosen your grip a smidge. Most of the time it has to do with too much leverage. If $150 or $165 drawdown is causing you angst, then maybe you want to be trading a micro. And that's about as small as you can get, which instead of being down $185, $200 at the moment, you'd be down $20. That's also part of it. And you have to give yourself time. And you have to learn to swing the club, loosen your grip, let the club swing. And you'll feel, the connection when the club meets the ball and clicking back. Oh, that's how that feels. And then you kind of repeat that. Same thing in trading, right? Especially, using machinery to do it. Because we can give you the machinery, but if you're not over yet, and we do work with you during the Q schools to overcome that. Because if you bring all that angst, all that squeeze on the club into the strategy, then, you're not going to get the result you want. And sometimes the ball is going to not fly, perfectly, right? And I can remember, I remember when it was just Susie and me, and I was trying to, Susan really, really grip that club hard. Just like, she was really nervous, really anxious. She had no reason to be. We're fine. I'm like, Susie, don't sweat it. It's only, $200, $300. Don't sweat it. And I've told the story, and She was very, very, she would just, it was palpable to me. Like, wow, she would be, we've been together since we were 17. So she'd be sitting beside me. Okay, so the machine just exited out, took us for a small hit. That was a off the 5 minute. So she took us out. She didn't go long because the 30 minutes still short. So she took us out. So she was just really, really anxious about it. And I was trying to help her. Now we've learned a lot more since, right? So it probably was not fair for me to have done what I did. But um, I can recall, that we had put her in Susan put herself into the trade, and then her money started to draw down. And like, Donnie, I want to take it off. I'm like, no, no, no. You put the trade on, this will, leave it alone. No, 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 no. I want to take it off. It's going to lose. I can tell it's going to lose. It's going to lose. And when she was watching the money. And you know what happened? It lost. I didn't let it take it off, and it lost. This is very, very early days. Now, it wasn't fair because we have a lot more tools and a lot more stuff, so you don't have to go through what Susan went through, right? But she was so upset. I mean, and literally started crying. I'm like, Susie, Susie. So I stopped and I said, come on out from the office. Let's just sit down. Why did you tell me that? Why did you? And I'm like, Susie, relax. Okay, it's only $300, not a big deal. Not going to break the bank, but what we're trying to do here is we're trying to get away from the idea of trading the money. You can't do that. You can do it if you're going to trade a few times a month, a few times a year with some options. You can do it. Okay, it won't grind on you, but you start increasing your frequency and trying to trade intraday, and you're trying to trade the money that will eat you alive. So that's where and we work with that, during the queue and during the program. So you have to be able to learn. So when I sat Susan down, I'm like, this is where we're trying to go. This is back years and years ago now. And she's like, okay. I said, so don't sweat it. Don't worry about it. But we got a lot more available and a lot more tools available, but we learn from that, right? And I also, every time we teach a person, every time a person goes through Q, we learn something, and we try to incorporate that into the next one, the next person. So we've learned a lot. All right. So I was hoping that trade would stay on. I'm going to we need these computers, and I gotta get to work. We'll sit tight here for, we'll say, to 2:30, and then we will have to sign off. I'll keep you posted. We'll come back. Tomorrow's Thursday. We'll be back at minimum, Friday midday, and we'll try to give you a snapshot of where we finish for the week on this. But we'll see now. If this 5 minute confirms, it's giving us a short entry. It's not confirmed yet. When it confirms, you'll see a white, you'll see this box turn white, and there'll be a red 2 here, and that'll be confirmed. That is actually the signal. And that is the signal that would trip off, or could be sent to your phone or to an email potentially. Now, I don't do a lot of that because I have access, and I have, I'm not traveling about, and if I am traveling, I'm not really trading. Okay, good. Yep, good. Good. You do need to you do need and want to learn to, to be able to sit on, especially on your winners. Let them run. You don't want to sit on your losers, and you don't want to add to them. Don't ever like, oh, okay, well, if I add to my loser and if I get back to where I was, then I'll be whole, and then I'll average it. Don't do that. That's not good. It just makes it worse. You lose twice as fast, twice as much. It's not a good habit at all. Okay, so the machine just put that in. It's practice, Darian. It's practice. And we have steps to have you do it. Literally steps. There's a process to doing it. And it's just like everything else. We start you small and you just have to do it. And it's kind of it's and that's why we start out with like the 1-1-3-5. It's kind of like learning how to ski. I don't know if they still teach people this, but when we learned how to ski, Susan and I, they taught because we didn't know how to ski. We learned well, I guess we learned separately in high school. They had some, and then we skied in college. But they taught something called graduated skiing method, where they would take you up to the bunny hill and they put you on really, really short skis and you would start skiing, right? And then after a couple of hours, they teach you how to turn, do the thing, and then they'd come in and they'd give you skis that were like another foot longer and another foot longer. And maybe it'd be a couple of days. By the second day, you're actually trading, or not trading, I was thinking trading, skiing with full length skis. So the trading is the same thing. It's a graduated trading method. I'll borrow that phrase. We're going to start you small, and then you just have to practice and practice and practice, and you have to practice it, right? You don't like, okay, I know how to ski now, and I'm going to get on the gondola, and I'm going to go up to the top of the mountain, and I'm going to get on a black diamond, and I'm gonna start, skiing, the black diamond. So you got to go a graduated trading method, and you got to do it over and over and over again. And you'll do it and you'll make money and you'll be leaving a lot of money on the table. That's invariably what happens in the feeling. And that's when you know you're really skiing well or trading well. You're like leaving money on the table. And you got to do that over a period of time to build your war chest, your trading account, to build your confidence. And then maybe you lengthen the trades a little bit, you know, and not without increasing the margin. Where people get in trouble is they get a little bit of experience on the bunny slope, and then they get the giant skis and they go to the top of the mountain and they put on 5 contracts, 3 contracts, and they've lost a bunch of money and they want to get it all back, and they just lock up and hit a tree or something. You don't want that. And so we can show you, though, it's one thing for a person to say it, but we're going to show you how to do it physically with the machine from one chart to another, not just time charts, but the others. And it actually gets, it's not something that gets more difficult. It actually is something that gets easier. By the time Q school finishes, it should be ridiculously easy. And then you're underway. You gotta learn the lessons like everything and then apply them. You will get over it. You do. You do. It's just now those that are watching, we're not trying to demonstrate an outcome here. We're not suggesting that you try to take any of these trades, right? Please don't. Happy to answer your questions, happy to have you watch. But don't it's not a good idea, right? It wouldn't matter anyways, whether you make money, don't make, you want to be able to repeat something, right? So we're not trying to prove an outcome at all. It is interesting when you look at the swing machine on the 5-minute VIX, it goes long at 115. The ES went short at 120 on the 5-minute. The NQ 220. So the market's definitely under pressure. Is our program going to catch this, these moves? We'll see. It isn't really fast, right? 5 and 30 minutes. It's not trading a lot. It isn't going to trade a lot. If we were trading the 1 and the 3, the 1 and the 5, yeah, it's going to be trading a lot. And or a lot more, right? But if this thing, and it is a trend seeker, so if it breaks out into a trend, we should get that trend. May not get every single one of them, but if the market stays in the sideways move, then she may not. The money it is a byproduct. Yep. It's just a byproduct. Yep, I agree. And the golf ball is never going to land in exactly the same place. That's why it's like at the end of the day, Susan used to like to be able to tell me, like, Donnie, I want to go back and show you my trades. Like, it doesn't, I know what the programs are meant to do. It's like, why are we going to go back? It's not going to land in exactly the same place. So what always seemingly happens, we get a big move like we did yesterday. It was a lot of money to be made. And a lot of times, then it'll take another day or two, and everyone will, a lot of folks will come back into the market. Oh, wow, it's a big day. I want to come in and get that, and then we chop, we chop back and forth, and then they take the bitch down really, really hard. Like, sometimes it's after 11 p.m. or 1 or 2 o'clock in the morning, when everyone's sleeping. And then it gaps down like, oh man, I should have been, um, we see that. You just don't know. Right. It's 2:20. I mean, this day is running its course. We may finish here. We may, blow down. Um, you know, um, we're not forecasting. We're just trying to map where we are here and now and try to capture it. But even for me, if I'm trying to trade the 5 and the 30, and I got 2 charts and I'm trying to match it and I'm trying to look at this, look at that, it would be, be exhausting. But I'll leave this up so you can look at it. But the machine is doing it. We got the 5 and the 30-minute time frame flowing into, we got those data streams flowing into one chart. Then the swing machine strategy is running and it's interpreting just exactly what we've written. It's hundreds of lines of code. And now, why did we pick 5 and 30? I didn't know it was going to be 5. This goes back like 2 weeks ago. I wanted to show you this isn't a hedging strategy as much as it is a wedging strategy. I wanted to show what that might look like. So I started with like 1 and 5, and then 1 and 10, and 1 and 15. Then I went 3, 3 and 5, 3. I started really small and a back test over a couple of months. And I did it manually when the market was closed on a Saturday. And I spent a couple of hours doing that. And then I got ultimately and I even went larger, but the 5 and 30 looked pretty comfortable and it looked really good on the back test. So then I ran a back test, I saved that file, I plugged it into TradeStation Spark Fluid Optimizer, which then randomizes that data, then creates a a randomization, right? Before we had that tool, what we would do is we would collect the back test onto a spreadsheet, and then we would change the dates randomly going back in time and see how something would have performed. But it was very labor intensive, very time intensive to do. And now we don't have to quite do that. Now there are many good traders and many good quant traders that don't do any back testing, but we do like to do it. Pretty choppy. But you can see the difficulty if you're coming in, if you have limited, now, if you have limited time, and it's okay, right? And we do this in the Q school too, we'll ask, well, how much time do you have to give and what time? And then there are other programs that you can try to run with a limited amount of time. This one, 5 and 30, you need a lot of time. We got to let this, breathe. We got to let this go. And it takes time. Now, I just want you to know, we have members of all different stripes and bank accounts, right? I don't want to know, but I kind of know. Um, so we have folks that are trading micros, multiple micros. We have folks that are trading minis, and we have folks that are trading multiple minis. Okay. Um, I like to trade a mini on just about everything. I have the capacity. It's very comfortable to me. It's very comfortable. Could I put more leverage on and make myself uncomfortable? Yes. Okay. However, and I've had conversations like because, we can, I encourage or let our annual members know if they're hit a slump and they want to send me their scorecard. I can glean some things from the scorecard, but I can also glean when I see the amount of money that the money may not have been a mini. So I'm thinking of one member in particular, and he's like, "Well, Don, I can't trade, two or three or even, five minis because it isn't enough to even get my attention." So yeah, he's in a different place. He's in a different place. Good for him. Good for him. Um, if I had and I did start out trading 5 and 10 minis on just about everything. And it wasn't right because it was too big. It was too big. And we even tell the story there. It was just too much. So I don't need that kind of stress. It was just too big for me. But for him, he's in a different place. And it's kind of like, okay, it's like, Don, if I just trade 1 or 2 minis, it's like, it's not enough to even get my blood going. Um, so we help you kind of think that through, and also map out proportionately and to get you trading in proportion, because then it's all scalable. It doesn't matter if you're trading a mini or a micro or a mini or 10 of them or 50 of them. You can't move. Now you get up to these contracts won't move. From what I understand, a tick unless they get like 100 of them. So there has to be like at least 100. You put an order in for 100 contracts, you might move, the market, a tick, but then again, you may not. There have been studies done, and it's got to be, they trade incredibly size, right? You think it's just like one, but it isn't. Now, again, I'm describing this to you. It's Wednesday. It's 2:30. So it's kind of like late in the week, middle of the week. It's a holiday week. It's kind of late, and we're late in the day, So, and I'm looking at the account. I mean, the account's fine, right? We're going to have a fine week. There's no question about it. But if we get to be like 3 o'clock or something, and I have the opportunity to clean up that 1600, and I'm just thinking ahead. I'm just and maybe we're up 2 grand. I add 4 or 500, and I say, you know what, I'm going to just take that off. We'll regroup and see about maybe doing it, turning on early tomorrow morning. I might do that. Oh, that's excellent. Darian, well, that's excellent. Yeah, you just get, that's excellent. And no, and then stop, stop. You want to have kind of a daily plan. It doesn't always go as scripted. You want to have a weekly plan, but you may even have to, so you have to practice the daily. You may even have to practice the weekly, meaning stop and have to find something else to do, and just stop. You can do things in trading that you can do in life too. I don't even like talking about it, um, because it's like mentioning the word shank in golf. I don't even like, if I'm playing with somebody and I see them shank it, like, ooh, I don't even like looking at it. I don't like hearing it. It's when you hit the golf ball off the hosel. And I don't even want to say the word, amongst golfers, like, oh, I don't even want to think about it. But it can happen. In fact, there was a golfer last week, one of the, he's, what was it, Scheffler or Schauffele? I think it was Scheffler, and he shanked it off the hosel. It's a hosel rocket. It feels terrible in your hands too. You can do something called self-sabotage. You know, you have a good day, and then you start feeling cocky, um, invincible or something, and you get off your game. You get off your game. So again, take it back to golf. There was a guy, Zach Johnson. I remember when Zach Johnson won the Masters, and he's a little guy from Orlando, and Lisa used to live in Orlando. And his approach to the Masters was that he was not going to shoot for any of the par fives and two. He was only going to play them in regulation. And he figured, he would do better, but he was not going to shoot at a par five to try to get there in two shots to give himself an eagle shot. And he was on his it was on Sunday, and I forget one of the par fives, and he was really close where he could have shot for the green in two, and he didn't do it. He laid up, and then he got on in regulation. And they asked him about it afterwards. He said, I had played all week. My plan was to play it in regulation. And it had already gotten me there, and that's what I decided to do. I didn't have to do it. I'm not going to do it. So when you get up and you have a good day, and you're up 2,800, you don't, you know what, next time I'm going to eat another potato chip. I'm going to throw another contract on, and I'm going to really punch them. Not a good idea. Because that's when it goes in the drink. It's the same. It is a sports psychology here. I don't care if what your sport is: hockey, basketball, baseball, football, golf. There is a sports psychology to this a little bit, right? So that's what we're trying to just show, and we're using technology in a big way, and then just get very mechanical. And then ideally robotic. Now I could go up, and turn it off and, close that 280, and, would only be down, 1,400, and that'd be all right to do. I'm going to let it run here. Now, one of the things that happens after a big down day that we had yesterday, we get into the 3 o'clock hour. If anybody was long hedge funds in a big way, they may have got some margin calls, and their brokerages tell them, hey, you've got to either, lighten up or put more money in your account. It's usually by 3 o'clock the next day. So we can see after a big down day, a lot of times, 2-3 days. Now a lot of them have 1 day settlements, but it used to be 3 day settlement. You get a glimpse of, geez, did somebody blow up? Is somebody having to liquefy, between, now and 3 o'clock? Equally after 3. So you might want to, if you're trying to get long, you might want to wait until the 3 o'clock hour. And then, usually between like 3, after a big sell-off, between 3 and 3:10, you'll get a feel for whether or not they're going to buy it up into the close. And they may not. They may say, hey, let's take them down again. And we have international players too, right? So they're sleeping. They'll be back in tonight. So they also are trading our markets. So let's go take a peek at our little Renko. Okay, so this may have been just a little bounce here, right? We had that big move yesterday. We had a little bounce. What we want to see is, can this bitch get on down here, take out yesterday's low, and take it down? I don't know. I think it's a tall order for 45 minutes, but it may not be such a tall order for the end of the week, right? I still think, we'll leave this up, but can we get to 53.84? Maybe. But if you don't have any experience doing this and you go putting on a mini contract, not a good idea if you don't have any experience because, it could go against you. And you could lose quite a bit of money if it goes against you. You don't have a discipline and you're trying to put it on overnight and, not a good idea. So once again, that's kind of why we start out with these smaller time frames in Q school, just to learn to learn to ski on the bunny slope, learn to chip the golf ball with a pitch and wedge, with a little sand wedge, bump and run, boom, boom. Just trying to get, a comfortable posture, comfortable stance, a comfortable grip, get the club hitting the ball, just, and just be happy to do that. And all of a sudden, like Darian says, well, I just had a $2,800 day. Well, that's not chipping the golf ball. That's a nice day. And you start putting together, you put 15 to 20 of those things together. The biggest concern you're going to have is then, just don't psych yourself out. Just stay comfortable. And then the markets will change. The markets will get tight. The markets will expand. We got tools to measure that and look at that. And we actually have a tool that can tell us how much money this is not to be. Let's see if I have it here. I don't think I have it. Yeah, don't worry about taxes. Yeah. Yeah. Taxes are a business expense. We all got to pay them. Just, yeah, don't worry about it. I never have in all my years, even with stock, ever made a decision either in or out based on taxes. If I want out, I want out. Could be December, could be wherever. I never make a decision based on taxes. They want you to, but I don't. Now, you can get self-directed IRA accounts too, and then, of course, your taxes are deferred, right? Yeah, I won't change it, but we actually have a tool that can tell you market by market how much money, if you're trading one mini, how much money would be a comfortable amount of money to have. Let me go see if we can find it. I think it's in here. Let me go look. I may not have put it in. I need to. And we don't look at it every day, but you might want to look at it before you. I don't think we have it in here. I don't think so. We'll get it in there. I'll show you Friday. And it doesn't mean that the machine might tell you that if you're trading the ES contract, and you're trading it well, you should be making, $2,000 a day. Well, that doesn't mean that if you only make 500, you should, begrudge yourself because the machine said you should make two and you didn't make two. That isn't how it's used. We use it to help us define what markets we might want to trade, and then to understand where we are, because it also could be true that the machine thinks like if maybe it's 2000 and you made 2,800, you say, hey, I even did better, maybe I should stop, that sort of thing too. So it's helpful and it's subjective. And it depends, and in the way it's written. And the reason why we developed that tool was folks would ask me, well, Don, if I'm trading a mini contract, how much money a day should I be prepared to make? And I would say, well, that depends. And they would say, like, on what? And I said, well, it depends on the market. Are you trading the NASDAQ? Or are you trading the Russell? Are you trading gold futures? Or are you trading oil futures? Okay. So then they would say, okay, well, it's oil. Then I'd say, well, then it depends. Depends on what? And I said, well, it depends on the market. What it depends on is really the volatility in the market. So we wrote a program to take in a view of that and to give you on a day-to-day basis, certainly you don't have to look at it every day, but weekly, how much money if you're trading. And that's one of the reasons why we don't trade bonds or treasuries, because you got to use quite a bit of margin and they don't make any money. I mean, it's like 200-300 bucks a day. They don't move. So we don't trade them. The NASDAQ futures can get, we've seen it as low as like $700 or $800 a day. That's really, really tight. And so it's like, wow, we already, and when you look at it and say, wow, that's going to be really, really tight. But other times, and I'll look at it tonight, I'll do it on the video, Darian. Tonight, we'll look at that. And it might be like $7,000 a day. Well, you shouldn't bemoan the fact like, wow, it's saying I should make 7,000. I only made 2,800. No, you should be good that you made the 2,800 or whatever market, was there on the NQ. But it just is, it's an independent, objective, it's a reality check. That makes sense. And I'll show you tonight what that is. And so it can help you in advance, choose a market to trade and know in advance, engage what you're doing. And then just don't, golfers talk about this all the time. We're all human, so we all do the same thing, but we got to try not to. And that is, don't project. Tomorrow is tomorrow. It ain't here yet. So next week is next week. It's not here yet. Let's just live in the moment. Let's just live today. And yesterday's trade is yesterday's trade. The trades you made this morning, they're gone. They're done. You can't get them back. For better or worse, they're gone. So let them go. Golfers talk about living in the moment. It's true. It really is true. And Susan, when she hears this from me, she's like, man, why didn't you ever listen to me? Because Susan's very into the metaphysical of everything. She's into yoga and been that way for years. And she's into meditation and all that. And I never really did that, but I've come to realize that. And when you do it in your trading, Darian, it really does become meditative. It really does. It's like not only is you're not anxious, it gets like really, really quiet. And I don't want to even add to the noise. And if our members are here and they're on Zoom, they're like, oh man, he's talking about, they probably just shut off the volume, which is probably a pretty good idea, right? I don't even, when I'm here doing the Zoom or on YouTube talking, but when I'm trading, I don't even think about it. I'm not thinking about it. I don't think the professional golfers are thinking about their grip, their stance, they're not probably thinking about that. They're just, probably not thinking about anything. Is even better. Makes sense. All right, so this trade is off and running. So we got some folks that are probably having to get out of the market at around 3 o'clock. And the Sharpies will be watching this. They'll watch this. And they'll say, shit, man, there's someone's in trouble here. Maybe, we'll see. If it's going to run, it usually runs between 3 and 310, 312, not 315, between 3 and 310, somewhere around there after a big sell-off, if it's going to happen. It's looking like maybe not. So I don't know. But I'm thinking that, maybe, let's see if we can get down and if we get an opportunity just to clean up all those losses, right? That would be a small victory. That's okay. Sometimes we got to just, you know, tread water a little bit and get ourselves in position for another one. But we'll see. Oh, I'm going to let it go. We were close there, weren't we? I thought we were getting ready to take another one on the nose. By the way, Darian, I'm not sure if we've sent you a scorecard, and Scott, I think we did. Scott's also a monthly member. Um, Let me know, and we'll send you a scorecard. Even folks that are non-members, we will send you a scorecard. Keep score. Keep score. At the end of the day, just write it out, save it to a file. It'll give you confidence for later. Now this is it's 3 o'clock. if this bitch doesn't pull up by 310, it could really accelerate in the last hour. I just want you to know that. Please don't take any of this as trading advice here. I'm just sharing an observation. May not happen this way, but many times it does. And you can understand it's the oh shit trade. People this morning came in thinking buy the dip, buy the dip. They didn't appreciate the severity of the decline yesterday, and they come in and they buy the dip. And then but they're watching that last hour. And then as they see it turning down and they see their calls going to shit, they'll yank them off. And then we could accelerate down. So, but we're fine. It's a lot of thinking. I try not to think about it, but I know where I am on the course, right? And so when you're playing golf, you got the shot at hand, but you also kind of know where you are on the course a little bit. We'll see how it plays out. But I'm watching that clock. We're at 3:01, and so I'm gonna leave it. I would like to, I'm gonna feel a small victory if we can clean up that 1600. If we add to our account today here, I'm gonna feel very good about it, but we'll see. I don't want to add to it, so at least I know we're gonna have a shot to reduce that drawdown. Not every day is gonna be a winning day. 305. See this start to accelerate. If it's going to bounce, we're going to see it come in on the 1 minute here and here on all of them. You'll start to see some green coming in. And what that is, that's machinery with trailing stops. And that's what it comes in. It's not the public doing it. It's machines. You'll see it on the 1 minute. You'll start to see these boxes on the 1 minute start to turn green, and they'll do it usually on all four markets. Then we know, like, oh shit, she's not gonna, and we might just take our bread here, just because at the end of the day, right? I don't want to be, I don't want to be in this after 4, especially with what we've done. But I do want to give it a chance to crash out here. So watch the 1 minute. The 1 minute is the most sensitive here. See, the 30 minute, there's no, it's not that sensitive. It's 30 minutes. It takes a while. If I see it, I'll let you know. But we got, in this 30 minute, we're only here, we could be down. It could still come down plenty of room to come down further. And everyone who bought those dips, they're like, what? What happened? What's really dangerous about a market that is making new high, new high, new high, whether it be the S&P, Bitcoin, Ethereum, something like that, the truth of the matter is it doesn't really matter why people and how they're buying. They could be buying the dips, they could be buying the highs, they could be buying whatever. They're just buying. And when a market is making high after high, they're all right. And they think they're all right for whatever reason they bought. That's when a market becomes really dangerous. Those market highs. Because then everybody's been in there. So when the S&P hits an all-time high, anybody and everybody, including all the dead people who bought, are along. Panic on the ES is showing, yeah, on a 5 minute basis, on a 5 minute, I wouldn't overread it. We can trade that a little bit for counter trend trading, but I wouldn't overread it. The panic and fear gauge. It's a little bit more important when we get to, an hour, 30 minute hour. So I wouldn't overread it on the smaller time frame. Yeah. On a daily, it's important. Very important. But we're not there. Let's go look at the VIX here. VIX is up another 5 or 6%. Let's put this on a daily view. So VIX is at 70. It could go much higher. If it continues to stay up here stubbornly, the markets are going to struggle. They're going to sell all those rallies. Let's put the ES on a daily. Where are we on the daily? We're just here, we got a lot of room to fall. Now, when the market, if we don't know, but if the VIX gets up here and the market is here, wherever we are, we might be at 5,100. I don't know where it'll be, but it'll be there. And when these gauges get here and here, then you want it, and you got options on that shorted the market, you want to start taking them off. You want to start taking them off and getting ready to go the other way. Just as they did back, a few weeks ago. You have to begin to, bring this cash register. We'll put these back to 5. But on a 5 minute, they're not as important. You can trade them. You can learn, we will teach you, but it's not the first thing we do. All right, so we're looking pretty good here now. We just recovered a draw. So what I'm saying is that the account, we had a $1,600 draw. We've basically recouped that. So, if I'm on the golf course, I'm like, all right, I could have lost a couple of shots here. Um, I want to make sure that I get into the clubhouse here, intact, and I'm going to feel pretty good about that. But I still got time. It's only 3:10. And if they were going to rally this bugger, they should be rallying it now, and they're not. I don't see any indication of it, right? The Dow's got a little bit. You see it showing up here. Oops, this is supposed to be a 3-minute. This one. Now if you have this on your desktop, you may end up changing the intervals, right? You may put them on ticks. We have other members that like to trade 2, 2, and 7. But we keep it at 1, 3, and 5 just for continuity. See the 1 minute on the Dow? See it starting to tick off these little greenies? That's some trailing stops in there. That's what all that is. I don't see any up here yet. I don't see any up here. I don't want to see any. I want it to keep motoring. Here's the Russell starting to generate a few. We want to see it accelerate. No, now the other thing that we could do, the strategy is running, and it has it. I'm here. I can, I got eyes on it. But if I just want to relax and I don't want to be bothered, I could go in and turn the strategy off, go to the TradeStation matrix, set myself a guaranteed $1,000 winner, and just leave it alone. And just get up, go to the mailbox, just relax, give it a chance to play out. I'm guaranteed to, at least on this trade, make $1,000. For the day, I'd lose $600. That's nothing. And, and that's fine. I mean, we make that up in one trade. It's no big deal. I could do that, right? I'm probably not, but I could. And we'll show you how to do that. That's where I can't get in people's heads. You don't want me in your head. It is a heady game of sorts, right? But you want to play, you want to trade your game. It's your money. It's your time. We just want you to trade, disciplined, mechanical. I don't know how else to describe it, right? No, I'm going to go get long Mara because, I heard some guy talking about Bitcoin on Discord, and, Bitcoin goes to $300,000 a coin, and I own Mara, or I own Riot, or I don't even, and then I'm going to turn 30,000 into, 150,000. Maybe, or maybe, your 30,000 goes to 5,000. We don't do that. See them showing up. Now they may dissipate, but you can see them showing up. And they're what they are. They're trailing stops on machines. That's what they are. You can literally see them. Susan's not here now. She's not in her office, but she is most mornings, and I'll hear her, and she'll say, like, "Oh, here they come, Don." I can hear her. She'll be like, "Here they come." Now, I'm not saying that, I'm not going to do that to you. I don't want to, but you can see them start now. Those are trailing stops. So I'm going to have a little decision to make here. And you know what? I don't want to have to make the decision over and over again. So I'm going to go into the matrix and may not even get a chance here. Let's see. And I may have to just take it. Yeah, we're going to take it. Let me do this. Let me get it. I think it's so close. I'm trying to protect a point, $1,000. So let me see if I can do that on the matrix. It's really, really close. 200 bucks on NQ is nothing. So what I want to do is, there it goes. All right. So I don't have to keep making this decision. I'm going to put a buy stop that'll guarantee me a little over $1,000, and then I'm just going to shut off the strategy. I'm going to shut up and just relax. All right, so I now have a stop, and I'm going to turn the strategy off so I don't double anything up. The strategy is now disabled. It asks me, do I want to close? I'm going to, nope. But see the asterisk beside the 24? That means there's a stop there. And guess what? We just got hit. Okay. After all that, we only got 45 minutes. I'll let you watch. I can get done what I got to get done this evening. We won't be on back tonight. Tomorrow's Thursday. We won't be on tomorrow. We'll try to check in on midday. We didn't advance the ball, but we didn't get really hurt either. But let's see what the market, of course, is probably going to run on down. But and you'll be able to follow it from here. We can see, we'll be able to see this 5 minute, and if it runs up to $3,000, we'll be like, well, maybe we should have, been a little more patient. But again, end of the day, I'd rather be out a lot of times, by 3. Any questions, let us know. You see the 1 minutes coming up, all four markets. It's a commodity. They're all commodities, and they're starting to rip. They're coming up. Now, the likelihood is they're going to resume back down, but we're also running out of time at the end of the day. So one of the things that happens is if you have people that shorted in the morning and they got to flatten out, Also too, because of the margin, the margin goes up, 10 times, tenfold for a lot of firms, not everybody, but a lot. And so that comes out. So you get a lot of short covering if they were trying to get bearish. And it's very thin, but it could, that's why I kind of want to be out of the way. So we're not going to do any more trading, but we'll let you watch. And um, I think today is not much of a day. I think it's just kind of an inside day. Our Nicholas is short the markets. Probably will be still short. We'll look at it tonight. And I think the next couple of days is going to be really, really interesting. And I think they'll be on the dark side. What we want to see is we want to see this. This is where we are right now. Maybe tomorrow we could gap down. Did we get into that gap? Let me go look. We got it on our skew page. Let's go look. Oops. There it is here. Here's the S&P. No, look at that craziness, huh? Skew still very high. So look at this. What was yesterday's low? 55.28. Where are we here? Are you kidding? 55.03. 55.04. So we're one point under a low. We got a lower close. Here's the gap. The top of that gap is the high is 54.63. We could still break down. We're going to get into that gap. We ever gap down like tomorrow on something. I don't know if there's any economic numbers that could be. This is very ominous. Do you see this rounding? That's a rounded top. That's really not looking too good. So we would, get this rounded top here. See this? It's almost a reverse cup with handle too. You can come up and just do a little handle, but these are not good. And it's this one here that we want get down, and then we could be right back down very, very quickly. Come on, baby. Take it forever. We'll go back. You gotta bounce it up here a little. Yep, they're bouncing it. We probably won't be doing too much more. We're going to do a YouTube on Friday. Next week is going to be a little thin. We have folks in Q school now, so the fall is getting underway. Folks come back after the summer and want to get underway. It's a great time. And so again, if you're interested in that sort of thing, definitely reach out to us and just make sure you have we can fit your schedule. right? Just don't assume. We do schedule out, but we do have folks starting, and as they bounce this up here a little. So. I don't know what it is about the 5th of every month. Many times, not all the time, but many times, a lot of market moves happen on the 5th. They get the new money into the market coming in at the beginning of the month. August 5th, there was a big turn down. The dot-com crash started like on March 5th. The financial recession, Great Recession of 2008, which is a bit of a joke, ended on March 5th. And we even said back a few days ago, beware September 5th. Really sloppy trading today, weak finish. VIX very elevated on the daily, very elevated. I don't know about any economic numbers either. I don't think there'll be any tonight. There could be some tomorrow. There could be a jobs number, but I'm inclined still we're sitting right above, precariously above that gap up. I got the feeling that we got a gap down. Our Nicholas system is short. Trends are extended and under pressure. I think we're going to fill it, folks, and I think it's going to catch everybody by surprise. I think the next couple of days could be nasty, but we shall see. We're positioned with our options. We've been rather open about that. We're short this market going out end of September still and end of October. And then we're just exploiting what we do day in and day out, our intraday trading, which we don't really like to be doing much of anything in the last hour. But we'll see. We'll see. Don't don't trade on any of that. That's just an observation. Sometimes we get them, sometimes we don't. But and we look at this Renko on the S&P, and this is where we are, right? We're closing here. So if we can just gap down tomorrow, well, these won't show gaps, but if we can move on down, and I think this 5384, 5300, I think this area is still in play. We don't want to take out this spot. The options club selector would just give you some option trades. If you're looking for any kind of bounces, this is where we might be looking if you want to go against that grain. These are some trade setups that the machine is presenting out 35 to 45 days. So you might want to look at those. And on the short side, we'll scroll up and show you these. It's quite a few, right? It's quite a few. Some of them came in today. And then the iron condors are these. These represent the best iron condors for right here, right now. If you think the market's going to get jammed up and go sideways for a few weeks. We'll just say thank you for everyone stopping by. Good to see you. Darian, Scott, we'll get the nightly video done for you. And any other folks got questions, be sure to visit the site, send us any email. We probably won't be back up on YouTube tonight. Probably not, unless something outrageous happens. And we won't be up tomorrow. We'll try to punch up on Friday midday. And then next week, we'll do the best we can, the middle part of the day, Monday, Wednesday, Friday. But we're now, this is really, it's going to be a busy quarter. We got a lot going on. It's going to be great. Lots of volatility. And it will be there. I think the volatility will be here with us for months to come, especially after the election. It's going to be crazy. It'll be beautiful.
Could be we step out again. Could be tomorrow, but then could be 2010.
This is just a thin short covering. I wouldn't overread it. Again, not much of anything. We didn't really, I think we did make a new low. We did not make a new high, bit of an inside day. I think the next couple of days is still going to be tough sledding for the bulls. We shall see. I think there's an economic number or two out tomorrow and Friday that could impact things, but we'll see. It was a good thing that we took the bread, right? And we softened the blow. We've still got a very, very fine week underway, though. Public markets closed at 4. Futures closed at 4:15, reopen at 4:30, then close at 5, and then reopen at 6. The banks don't leave their money exposed. The public gets what they get. We shall see. Does anybody know the economic numbers for tomorrow and the next day, I think? I'm sure they do. Okay, folks, we're going to say thank you. Thanks for stopping by. Hope you had a good day. We know Darian did. Scott, hope you did too. Everyone else, thank you. If you're coming by for the first time and you're not familiar with who we are, we haven't been around for 6 months or 6 years. We've been around a long time, and long before Twitter and X. And be sure to visit the site. And if we can help you in some way, feel free to reach out. Any questions, visit the site and then email us and/or call. And we wish you the best. We'll try to see everybody. We'll try to catch up with you Friday midday. Will be the next punch up. That's what we're planning. Have fun. I'll leave everyone with this. I asked Bing, what is the difference between skeptical and cynical? Skeptical, this means having doubts or questioning the validity of something. Skeptics seek evidence and reason before accepting claims. It's a mindset that values critical thinking and inquiry. I'm very skeptical of a lot of things. I think you should be too. Cynical. This involves a general distrust of others' motives, often believing that people are primarily driven by selfishness or dishonesty. Cynicism tends to be negative or pessimistic, assuming the worst in people and situations. I am not cynical. Maybe with politicians I am. Have fun, everybody. Thanks. Okay, markets are futures are closed. They open back up at 4:30. They're open till 5, the indices. Then they close till 6. Then they open back up and we get to do it all over again. We won't be on YouTube until Friday midday at best. And so we wish you the best. We'll try to see you. Be sure to push the notification button on YouTube. We'll try to catch up with you on Friday midday. We'll let you know where we are. We've had a pretty good week. We're going to protect now. We got to protect the lead that we have. We're not going to, we've had a great week. Hope you have too. Be sure to visit stockmarketcaddy.com. Any questions, let us know. Have fun. We do expect the next couple of days, I think they'll be on the nasty side. I think we get this gap underneath. I think we have an economic number or two. We got certain catalysts, but the market technically does not look good here. So we do have, we trade futures intraday, but we have options and we are short this bugger. Good night and good luck.